before you start any business, what are the things you'll be looking for? Like, say for example, you are going to start a hotel business or a restaurant. What are the things? What are the things you'll be looking for before you start? Before you start, capital, okay. Profit is after, right? After running the business, you'll be looking for risk, risk and opportunity, area, absolutely correct. Competition, research, planning, marketing, right? Main thing is we'll be looking for capital. Money is required. Money is important. And second thing is competition. Whom we are fighting? Chef, and that's correct. You'll be looking for the location, proper location. You need to open the hotel business. You need to look for the proper employees, resources, everything. But I have to tell you, two things is important. One is money, and the second thing is the competition. You can have a lot of money, and if you have a lot of competition, your business will not survive, right? And similarly, even if you have, you can have a terrible chef. If you have a good marketing, and if you have good what do you call it? Good number of competitor or lower number of competitor, your business will be successful. So one thing we will be looking for is money and the competition mainly. Rest of the things will be that is also important, but competition and money. Okay. One thing you need to understand here in the trading is a pure business. Now, when I say pure business or business, trading is not like that. You are just buying and selling and you are making money. It is not like that. If you have that mindset, if you have that mindset setup, means please remove the mindset of that mindset from your from you have to remove that mindset. Okay. Trading is the difficult business in the world. Very difficult. It's a business. I'm not saying it's a gambling, or if anybody say it's a gambling, or anybody say it's a what do you call it? It's a speculative business. No, it is not a speculative business. It's a pure business and a very difficult business. And it's a simple business, but it is not an easy business. Okay, it is a simple business. It is not an easy business. Why I keep on saying business? Because business is always associated with the risk. Whenever you do business, there is no guarantee for the money. I mean, you know that some of you guys might have doing the business. Whenever you open the hotel business, there is no guarantee for that business. It can go well, it can go failure also, right? So consider trading as a business, not simply it's a buy sell game. Okay, it's not a video game, it is not a gambling, it is not a speculative business. It is a pure business. All right. Now here you have competitors. You have two competitors. Anyone can tell me who is your competitor in the trading? Who is your competitor in your trading? Institution, okay. Banks, FIDA. Mr. Nandan said correct answer. Mr. Nandan said ourselves. Your competitor here is you, not all the. Yes, of course, institutions, banks, big banks, all other traders are competitors. But your first competitor is you, because you sometimes be a buyer and you sometimes be a seller. You will be buying sometimes call option, you'll be buying put option sometimes. You'll be buying the shares, you'll be selling the shares. You are your first competitor. Okay, you have to understand yourself first. What kind of trader you are? Are you a day trader, or positional trader, or scalper, or you are a price action based trader, or you are an indicator based trader, or you are a XYZ trader? You have to identify yourself what kind of trader you are. Okay. I'm sure at the end of this boot camp, you can say that I am a smart money trader. You can say that I'm a smart money trader. Okay, first competition is you. You are the competitor. Your emotions are the competitors. Your greed, your fear is your competitor. If you are buying somewhere, if you are getting profit, and if you are exiting your position, you are a type of trader. You are buying somewhere and you are looking for more profits, you are a certain type of trader. Okay. So if you are buying somewhere, you are not putting stop loss, you are certain type of trader. You are buying somewhere, you are witnessing your losses, you are certain type of trader. Okay. There are people are losing money in the market because not because of the strategies, not because of the market, because of themselves. Because they feel that market will be going up. So I'll be buying from here, I'll be holding my position. Even after market reach the target, they will be still holding. They'll be still expecting that market will be giving more opportunity. They will not exit their position. They are not satisfied. Okay. So one thing you need to understand, there is an emotional control, psychological things you have to be really careful. Okay. We will be discussing about certain psychological aspects during this bootcamp. We'll be discussing about all those things, and I will be also giving you some psychological oriented tips. Okay. If you follow those tips, you can able to become a better man and better trader in a long run. Okay. But today we are not going to talk about yourself. We are going to talk about the institution, the big banks. We have two competitors. One is you, and other one is the big banks and big investment companies, big organizations. They are responsible for the movement of uh, any single currency pairs, any currency pair, any stocks, any cryptocurrencies. Who is responsible? The big players are responsible. When I say big player, what is big player? In collective term, we call them as a smart money or institutional traders or institutional investor or institutional traders. Now just think about India. India is exporting a lot of goods from to the overseas countries. Every single day we are exporting through ships, through airways. We are exporting the products. Okay. Now when we export the product from India to other countries, we are receiving money from other countries, right? We will be receiving the money, foreign exchange, from the other countries. So Indian government, Indian exporters, private exporters or government exporters or private importers or government importers, corporations, they are involved in this market. Just count how many cement companies there in India, how many iron manufacturing companies are in India, how many automobile sector companies are there in India, pharmaceutical companies, so many companies available, right? So they are every single day they are exporting, every single day they are contributing the foreign reserves, foreign exchanges. They are breaking some foreign exchanges. They are they are what do you call it? They are responsible for bringing the foreign exchanges, and they are responsible for paying the foreign exchanges from India. So they are involved in this market. They are involved in this market directly or indirectly. They are involved. Similarly, banks. You can see the banks. Every country have the banks, right? We have almost maybe 50, more than 50 banks there in India. They are involved in the foreign transactions. Suppose if you want to go to foreign, you will be exchanging the currency, you'll be spending that currency in the overseas. So they are involved in this market. And Reserve Bank of India, you can see Reserve Bank of India, they are responsible for printing the currencies. Okay. Similarly, in America and in Europe and Britain and every country, they'll be having their own reserve banks, like own central bank. They are responsible for printing the money. Okay, so they are part of this Forex market. they are moving the market. They are all called as smart money, institutional trader. Okay, they involved in this market and they are moving the market. First things first, you need to understand when you jump into the market, you need to understand who is moving this market. The market is moved by institutional traders or smart money. Right? Institutional trader or smart money. When I ask who is institutional trader or who is smart money, you can have some examples here. You can see financial institutions, which is nothing but you have lot of companies, investment companies, right? You can say Tata Capital, Reliance Capital, Goldman Sachs, Permal Funds, some insurance companies, right? Some mutual fund companies, lot of mutual fund companies there. Pretty much every banks have their mutual fund thing, right? So they are also called as financial institutions. And the firms and corporation companies like manufacturing companies, service providing companies, right? Google, Facebook, Apple, and Ultratech Cement, and you can see lot of companies, manufacturing companies, they are involved in this market. And central banks like Reserve Bank of India, right, and Federal Reserve of America, they are involved. Commercial banks, normal banks, ICICI Bank, HDFC Bank, State Bank of India, right, City Union Bank, Citibank, they are involved in this business. And as I told you, insurance companies, investment companies, the mutual fund companies, they are involved. Okay, these guys holding, these guys are almost 95% of time they are responsible for the movement of market. They are moving the market. These guys are moving the market. Okay, remaining 5% are individual traders like you and me. Okay, we don't have resources to move the market. We cannot move the market. One thing you need to understand, we cannot move the market. Stick that in your mind. Okay, the market is moved by the big players. Big players are moving the market. There we are calling as smart money, institutional traders, market makers, because they are creating the market. They are making the market. Market makers, smart money, big players. You can call different names. Influencers, market influencers, big banks, anything you can call. Okay, so they are responsible for it. Now, in this entire bootcamp, what we are going to learn here is we are going to learn how these guys are operating the market, where exactly these big players are operating the market. How can we part of these guys? Okay, we are not going to fight with these guys. They are like professional traders. So we are like novice. We don't have any experience in this market. Even though you can have 10 years, 20 years experience, you may not have the experience as they have. Okay, we are not gonna fight with these guys. We are not gonna fight with these guys. We are going to follow these guys. Okay, we are going to follow them. By the way, we will be able to trade and make some money for ourselves. Unfortunately, in those who are entering into the stock market, cryptocurrencies or forex market, they are using certain methods and like price action, support and resistance, and moving averages, and etc., all those things. They are using those things, and which is not gonna give you where exactly the big player involved. Okay, that is the reason even after 10 years, 20 years, we are losing money. Why we are losing money in this market? Because we are using the retail methods, retail trading methods. Okay, so from today onwards, we are going to use the smart money methods. From today onward, we'll be learning that. Every single day, we'll be learning certain things, and we will try to incorporate in the market. And by the way, we'll be making money. All right. Okay. Why is smart money term used? Smart money, when see the term smart money means this man, when I say you are too smart, which is not saying that you are not handsome. I'm not saying that you are handsome. When I say you are too smart means you actually using your brain. You'll be having some certain colleagues in your office, right? Some guys will not do anything, but they will be do some smart work, and they will be getting promotion, increment, incentives every single day, right? Similarly here we are going to use the smart money's way. We are going to think like the big players. We are going to think like the investment companies. We are going to think like the biggest insurance companies. Okay, that's why we are using smart money term. Okay, that's the reason. It is applicable for access the global market, Indian market. Yes, Mr. Pawan, you can apply this for any market. If you apply, I mean these banks and these hedge funds, all these guys are operating every single market. Okay, whereas in Indian market you may have some restrictions. For example, FIIs, DAAs, right? The foreign institutional investors. They can manipulate Indian market to the certain extent. They cannot freely manipulate. They can still influence the Indian market. Okay, that is what we are going to find. We are going to find, because Indian market is controlled by SEBI, right? You know that SEBI is the regulator. So they have certain rules and regulations. Not every banks can straight away influence the people or cheat the people. Okay, so in that aspect, yes, some restrictions are there, but still the concepts which you are going to learn in this bootcamp will be applicable to every single matter, because it's not only about the smart money, it's also about the market behavior, how market is behaved, where exactly market is reacting. Everything is proven already. Everything is already proven. So the smart money concepts or institutional trading methods are working. It has been there since 1940s. So from there, it is working, and people are using this method, and it is not publicly available. But recently, for the last 2 years, it has been publicly available. So that's why we are saying we have to learn this thing, and we have to apply this thing in any market. Any market you can apply, because almost every market is influenced by the smart money. Every market. Okay, it can be either government, it can be either private sector, or it can be either foreign investors. People are influencing the market. Okay, so what is smart money concepts? Smart money concept is nothing but it's a newly coined term. Okay, it's not the old term. People are telling that it's a smart money concepts because in back then it was called in a different language. So I'll tell you that at the end of this session, end of this bootcamp, I'll tell you what exactly it was called back then. Okay, so here we are going to use certain things. If you can see here, I have given certain points here. Okay, market cycles, supply and demands, trading with blocks, understanding imbalance, understanding liquidity concepts, applying advanced price action method. Okay, so we are going to use all these methods to decode the market. We are trying to decode the market. Okay, we will be decoding the market, how market is operating, what other things are happening. Okay, we'll be decoding using this. Today we'll be learning about the market cycles and market structures, and coming days we'll be learning every single things. Apart from this, we'll be learning other things also. Okay, so we are eventually trying to follow them. We are going to follow their footprints. All right, now. Okay, so far it is. Are you guys getting this right? So far, there is a person called Smart Money. He is influencing the market. Okay, that's what I'm trying to say. your support and resistance, your moving average, your MACD indicator, your XYZ indicator is not influencing the market. And please note that your broker is not influencing the market. Broker don't have that much money. Maybe some of the broker can manipulate you, but all chota brokers, right? These chota brokers cannot do anything. Okay, so it is not about your strategy, it is about the smart money who is moving the market. Okay, any market it is applicable. All right, so now from today onwards we are going to learn the smart money setups, smart money concepts, and by the way we are going to try to decode the market. All right, okay, all right. Now we're going to talk about the market cycle and market structure. Let me share my screen. So you can see the chart right now. You can see it's a gold chart. I hope everyone aware the TradingView, right? If you don't aware, no problem. Just go to the Google, search tradingview.com, log in with your Gmail ID. You can get this platform. And this platform is really good for taking demo trade and analyze the market. You can do the demo trades and analyze the market. But we will be using the MT4 or MT5 platform for buying, selling, actual buying and selling. Okay, so for now you can use this for analyzing the market and maybe trade the demo account. You can use this platform, but in a long run you will be using the MT4 platform. Okay, MT4 or MT5 platform. All right, so I took the gold chart, XAUUSD chart, right? Okay, Mr. Satyamurthy is asking if operators use SMC. Now most of the people Forex follows the SMC, and how then that's what I'm saying. It is not been there last year. It has been there since 1940s. Since 1940s, the big players use this method. Not exactly this method. I'm telling you guys. One thing I would like to tell you here. Big players, the big investment companies, they don't see this thing. Okay, they don't see this thing. They don't see the charts. They don't see the green candle, red candle. They don't see the the swing points. They don't see those things. Big player uses the data. They use data. If you just check any investment companies, they will be using the data, pure data, and they'll be using some mathematical operation toward the data. They are not using the candlestick chart. Please understand. Okay, they are using the data-based approach. Now, one person who lived in 1940s. Okay, I cannot tell you the name right now. If I tell the name, you will be start searching about them, and you'll be spending your time with that guy. Okay, I'll tell the person's name in the end of this bootcamp. Okay, because I want you guys to focus my teaching. Then you can go to any other one. One person who decode the market not based on the data, but based on the charts. Based on the charts, he decoded the market with the charts, and he just compared the chart with the data. Okay, and he developed the strategy without data. The big players using data, and whatever they use, whatever they buy, they sell, that is reflecting in the chart. Please understand, they are not using the chart. They are using the data. Based on the data, they buy, they sell. Smart money I'm talking about. Whatever they do, that is reflecting in the chart. Okay, and this particular guy who decoded the market using the chart, using the data, he compiled these two things and he developed the strategy. And that strategy is still working. That strategy given different names. Finally, it has been called as smart money concept today in 2022. Okay, so the big players don't have any better opportunity or any better methods other than smart money concepts. Suppose, what is the best way to make money? Okay, if you ask the big players, they say that this is the way. This is the best way. Best ways, it's working for longer period of time, and this is the best way. So why they have to change this? They will not change this. Even after next 50 years, this smart money strategy will be working, because this is the best way for smart money, not for you and me. Smart money using this way. Okay, that is the reason it is working. That's the reason working, and that is the reason a lot of mentors not teaching smart money. They are teaching the traditional price action, support and resistance in the YouTube channels or any other courses. Why all the brokers are teaching you freely? Remember, there is a Share Khan. There's a broker called Share Khan in India. The Share Khan used to teach the strategies for free. If you open the Demat account, I don't know whether they are still doing that. If you open the Demat account with them, they will be teaching the strategy. Why the broker is teaching the strategy? Even if you go to the Forex, OctaFX, there is an OctaFX broker, right? Just go to their YouTube channel. They'll be teaching the strategies. Support, resistance, EMA, MACD, they'll be teaching. Why? Why they are teaching for free? Maybe they get a commission. One thing you need to understand, they are brainwashing you guys. One thing you need to understand, whatever working in the market, they don't teach. Okay, they are brainwashing the people. Okay, but they use different methods. You need to understand that thing. Okay, so big players using the data. Have you anyone heard about the Anton Krill? Anton Krill. There's a person called Anton Krill. Anton Krill. He is the former Goldman Sachs. There's a Goldman Sachs company. I hope you know Goldman Sachs. Anton Krill. I don't know the spelling exactly. Krill, I guess. He's the former employee of Goldman Sachs. Goldman Sachs is the biggest investment company in the world. Okay. This guy have a course. If you want, you can join. That is purely based on data, not based on candlesticks. Okay. Purely based on data. How the big players are trading the market. That is the course. Okay. He is conducting. He's a former. But it is not for the day traders, it's for the long-term investors. Okay, this guy, if you go and YouTube check this guy's what do you call the lectures, he has a lot of what do you call lectures and podcasts kind of thing. Just see, he will be revealing about the smart money, and he'll be revealing about the broker and everything. If you have time, you can go through. Maybe not today, not tomorrow, after the end of this bootcamp. Okay. So you will understand how the big players are using the data, and you will not understand whatever they are using that is reflecting in the chart, and we are going to observe the chart, and we are going to apply the smart money concepts. We are going to trade with them. Okay. Now I'm telling you, even though 100 crores people follow the smart money strategy, every Indian follow the smart money strategy. Smart money strategy will be working because big players know how to manipulate you guys. Okay, you can do that. All right. Now this is not algo trading course, but if you are really interested on algo trading, I think our in the future university we have someone is I think I don't remember the name. Someone is teaching the algo trading, but I'll help you guys for developing the algo. If you know the language, if you know the Python, if you know the programming language, I can help you, right? I can help you. Right. Okay. Okay. Let's come to the topic. Now. Okay, Mr. Satyamurthy is asking, yes, sir. That's why I'm asking. In the past, everyone follows the normal price action patterns indicators, but now slowly people move into the smart money futures. In the future, it will also eventually increase. That's why I got a doubt. people follow the SMC, then big players can't make, no, big players still, no, sir, big players still able to manipulate you. Okay, they will be doing that. But they will not change this method, I'm telling you, because this is the 100% working method. Okay, even though Bitcoin came, people not using Bitcoin right now, but people still using the currencies, right? Nobody's ready to use the Bitcoin, but the changing phase will be taking at least 50 years. Next 50 years, you will not have the traditional currencies. You'll be having completely cryptocurrencies. Okay, when that comes, maybe your smart money also will be changing their strategies. Okay, but whatever they do, you can witness that in the chart. So if you are a good chart reader, you can able to trade the market. Okay, that's what we are going to learn from today onwards. All right, so enough talking. We will jump into the concept. All right, now you are seeing the gold chart. Now what is the thing happening here? Okay, we are in maybe we'll take the daily chart. One thing you need to understand here, any chart, any time frame you take, there is a one important thing you need to understand. In markets, history always repeats. History always repeats. What do you mean by that? In market, you have different, when you open the chart, any time frame, choose any time frame. What you are seeing here is market is going down, market is going up, going down, going up, going down, going up, going down, going up, going down, going up, right? And here going down, going up. So one thing you need to understand, in markets, you will be having, market will be going up or going down. The two things will be repeating over and over and over and again. You will be seeing either bullish candles, complete bullish candles, complete bearish candles, or you'll be having mix of bullish and bearish candles. This is the thing is repeating over and over and over and again. It will be happening every single day, every single time frame, every single currency pair, every single stock, every single cryptocurrencies. Any market will be either going up or going down. This is the two things will be repeating, keep on. Okay, that is what we are calling as a market cycles. Market has a cycle. What is the cycle? Market will be going up and market will be going down. Market will be going up and market will be going down. Okay, that is the two things will be repeating over and over and over. Okay. Now take a look at this chart. I'm taking let's say we'll take the 4-hour chart. Okay, 4 hour, or maybe let's take the daily chart. Now 1 hour, 4 hour, here you can see the time frames here. 1 minute, 5 minutes, 3 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, 3 hours, right? This is nothing but every candle, if you choose 1 hour, every candle is 1 hour. Every candle's validity is 1 hour. For example, you can see this green candle. So why I'm explaining this, some of you guys don't know anything about the candlesticks, right? So if you see this green candle, okay, including the wick, this green candle, what it shows, it's a 1 hour candle, which means for the past 1 hour in this green candle, people are buying in this green candle here. That's why this 1 hour candle tells that for the past 1 hour, everybody bought this particular currency, this particular script. Okay, if you see the red candle here, you can say that past 1 hour, for the past 1 hour, everybody sold. Past 1 hour, everybody sold. Or you can say in this candle, you can say that, okay, for the past 5-6 hours, people are selling the gold. Okay, so that is why we are using the time frame. You can see that if you are using 1 hour, it will show past 1 hour data. If you use 4 hour, it will show the past 4 hour data. For the past 4 hour, what was happening? Market is buying or selling. That you can witness. Okay. For the past 1 minute, what is happening? That you can witness. Okay. So here I took the 1 hour or maybe 4 hour. Now, can anyone tell me what is the direction of this market? How to find the direction of this market? How you will be finding the direction? Whether market is bullish or market is bearish, or market is going up or going down. What are the things you'll be using? What are the things you'll be using? Higher highs, okay. Using moving average, using trend, okay. Can we learn a simple method, a small, simple layman approach? Can we learn that? Because you guys are giving the big terms. I'm not comfortable with that. Trend line, higher highs, higher lows, right? It's kind of very difficult for me to understand. Okay, shall we learn some small method? Okay. Now, how many of you guys are aware about the swing points? We learned in the master class, right? Everybody knows that. Yes, Mr. Siddharth, I'll tell you that. Everybody we have discussed about this thing in the master class, right? You know the thing there, right? Don't confuse about the strategy. I'm just asking whether you can able to see this, right? That is the thing we want. Okay. Now we are in a 4 hour time frame. Okay, 4 hour time frame. And what you are seeing here, do you see the swing point here? Where you are seeing the swing points? Do you agree with me? This is 1, 2, 3, 4, 5, maybe 6, 7, 8, 9. You guys agree with me? Swing points, right? Lot of swing points, really confusing. Mr. Raghu is asked when we started the session, he asked that lot of swing points are there. Which one I should choose? Okay, we will be discussing about that in the coming days. Now you can able to see this swing points. All right. Okay. First things first, what you need to do is choose any higher time frame. Okay. When I say higher time frame, 1 hour, 4 hour, daily, weekly. Okay. 1 hour, 4 hour, daily, weekly. Any higher time frame. Choose any higher time. Okay. What you will be looking for is a swing points. A recent swing point. Does this look like a recent swing point? This is look like a recent swing point. This is look like a recent swing point. I'm just marking. Okay, you can see that. Although you may see that it's look confusing a little bit. Don't worry. Let me remove this. So do you see the? Let me zoom in. Okay. This is first candle. Second candle. Third candle. Do you agree with me? It's look like my fingers. Guys, if you are not sure about this, no, don't worry. We will be having we had the masterclass session, right? Where you can refer. Okay, it's look like this, my 3 fingers, right? All right. So this is the second candle. This is my swing point. So can I mark that like this. So for identification purpose, I mark like this. Okay. This is my swing point candle. All right. Similarly, which one is my latest recent swing low? So can I say this one? 1, 2, 3. Okay. So can I mark the second one? So I'm not marking, I'm not extending. Okay. I'm just marking the candle. This is the candle, this red candle. Okay. Here, this green candle. The middle green candle. Here it's a red candle. All right. Okay. This is the recent swing high and this is the recent swing low. Everyone agree with me? So far, everyone agree with me? No worry about Shivam, no worry about those things because we are seeing this a 4-hour time frame. Okay. You just need to mark the recent swing low and swing high. Don't worry about whether it's overlapping with other one or it is combination of both swing highs and swing low. Don't worry about those things. Okay. Just mark the high part and low part recent. Okay. Yes, we are looking for the recent swing highs, recent swing low. You don't need to mark. You don't need to mark like this. Okay. I'm just for the identification purpose. I just put this box. Okay. You don't need to mark. Okay. This is the recent one and this is the recent one. Correct. What is the previous one? What is the previous one? Can I say this one? Are you agree with me, guys? 1, 2, 3. It's look like this. We don't have high. We may have the high here. No worry, but we have the low here, right? Can you able to spot this out? So far, it is.
Hello.
Are you guys? Hello.
I'm sir here, Arpit here.
Yeah.
Sir, the third box you had made
Mm-hmm.
at 12, I think.
Mm-hmm.
So you are considering this red candle and 2 red candles and 1 green. Okay.
Yes. 1, 2, 3. Yes.
So if I will read the chart at random, not
Mm-hmm.
at this time or at random, so
Mm-hmm.
I will consider this thing that this red, green, and other one.
Yeah. You see here. You don't have that swing point, right? You don't look like this. All right. Let me
Yes.
delete this. Is it look
Oh,
like this three
let it.
candles look like this, right?
Okay.
Are you follow? Are you able to follow this? 1, 2,
Sir,
3. We don't have anything like this here. If you have something like this, or maybe if you have this candle is little bit low like this, for example, if it is like this, then this is 1, 2, 3. But here you don't have that, right? Only here you have that. 1, 1, 2. Okay, this is typically it's your reversed fingers. Okay. Right. So that is the reason I considered this. If you have any other things, maybe you can mark like that. Okay.
okay, sir.
Yes. We are looking for the 3 candles, and it can be any 3. It can be the last 3 also. 1, 2. What is last here? Which one is last? That's my question. Here, this is the swing point, right? Most recent swing point. Right? Just give me a second. If anybody want to talk to me, maybe you can raise your hands. I'll unmute you guys because this will be disturbing the others also. The recording also will be spoiled. So that's why I'm muting everyone. If you want to speak, maybe you can raise your hands. I'll unmute your guys. Okay. Right. So we are looking for this is now market is here, right? Market is moving here. This is the last point now. This is presently happening, right? This is presently happening. So in this present moment, this is my recent swing point. In this present moment, this is my previous recent swing point. In this present moment, and this is my swing point. Okay. So you have to mark, you should know how to identify these things. That is the thing I'm insisting here. You should know how to identify this thing. Okay. Any chart, take any chart. Now let's take the Euro USD. Euro USD. Okay. Now see this one, which is my recent swing high. Now this is happening. Okay, you cannot conclude now. This is not completed yet, right? This candle is still running. This candle is still running. So you cannot choose this right now. Right now you cannot choose this. But this is my previous swing low. Okay, this is my previous swing low. And what is previous one? This one, this previous swing high, previous swing low, previous swing high. And what about the previous one? You have something here, but it is somewhat both are equal. So you don't need to mark these things. Maybe you can choose this one. Okay, you can choose this one. So one, the recent low, recent high, previous recent low, previous recent high. Okay, so that I have, I don't want to waste time. It is already explained in the master class. It is not a big deal. Okay, you have to refer. I hope everyone know the swing points, right? Or anybody want to revise this swing point thing, because I don't want to waste further time with explaining this swing point, because it is not even available in the PDF. Whatever I'm going to teach you, which is not even available in the PDF. Okay, this is for additional. This is the additional thing I'm telling you right now. Okay, this is already available in the masterclass. If you go through the masterclass recording, you will get to know this. Okay, you are looking for this pattern and this pattern. Okay, don't worry about that. It's not going to serve the purpose, but it is required for certain other things. That is the reason I'm explaining. Okay. Now that is the reason I'm telling you. We are going to explain the trend. That is the reason I'm explaining these things. Okay. Now you have marked the levels, right? Okay. Now one thing you need to understand, in markets, you have I told you guys certain things are repeating in the market over and over and again. Okay. One thing, market will be always expanding. Market will be expanding. What do you mean by expanding? Market will be from bottom to top, it will be going up. Going up. That is called market is expanding. Or market will go down. That is also called expansion. Please understand one second. Please focus on what I'm telling you. Market will be going up or going down. Okay. If it is goes up, we are calling that as an expansion. If it is goes down, that is also called as expansion, because market is expanding. Now see this one. I'm deleting this everything. Okay. See this one. What's happening here? From here, market is fell down, stopped here, correct? Stopped. From there, market is going up, stopped here, fell down, going up, stopped here, fell down, going up. Okay. Now, what is this? What is this down movement? The down movement is called expansion. Expansion. Market is expanding to the downside. Okay. From here, market is going up, right? What is this? This is called expansion. This is also expansion. Market is expanding to the upside. Okay, market is expanding to the downside, market is expanding to the upside. Okay, now in this expansion and in this expansion phase, expansion upside, expansion downside, in this expansion phase, market will be taking some rest. Sometimes it will be expanding, 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 expanding. It will be going like this. Okay, sometimes market will be expanding, expanding. Market will be taking some rest. Okay, see this one, expanding, going up, going down, going up, going down. This is called market resting place, or you can call this as a contraction. Contraction. Okay, market will be expanding, market will be contracting, market will be expanding. Okay, expansion, contraction, expansion, expansion, contraction, expansion. This is repeating thing. Now, if you don't understand this, just see the chart, just zoom out the chart. Zoom out the chart. Okay. So what's happening? Let's see this one. Market is expanding, market is contracting, market is expanding, market is contracting, market is expanding, contracting, expanding, contracting. Here, market is expanding, contracting, expanding, contracting, expanding, 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 contracting, expanding. This expansion and contraction, this will be repeating over and over and over and again. Okay, in other words, you can call this uptrend, downtrend, ranging market. Okay, market is up, market is going down, market is ranging. Ranging, or you can say market is expanding, market is expanding, market is contracting. Okay, market is contracting or market is expanding. Expansion, contraction, two things. Okay, now you may feel that what is expanding, what is contracting, what is the purpose of this expansion and contraction? Now I know that expansion and contraction. How do I know expansion is started? How do I know contraction is started? Or how do I know ranging market is started? You'll be having that doubt. Sorry, it's okay, that's right. I'm agree with that. You are saying expansion, ranging market, expansion. Okay. How do I know expansion is started? How do I know expansion is stopped? How do I know the contraction is over? How do I know the expansion is started here? Okay. We'll be discussing on that. Okay, so one thing you need to understand, market have two different phases, expansion and contraction. Expansion, contraction, expansion, contraction. This is a repeating thing, will be happening from the ever since market is created. This is the two things is repeating: expansion, contraction, expansion, contraction. Okay, now how do I find the trend? I know that I'm going to buy the market. How do I know I will be buying, or how do I know I will be selling the market? That is the question. So we talked about two things, expansion, contraction, and we talked about the swing points. So we are going to combine these two things now. All right. Now, how do I find the trend in this current situation? Let's go to the recent chart. Let's go to the recent chart. Now, I told you guys, smart money involved in this market. Smart money is involved in this market. Now, anybody can tell me, for example, this area, okay? This area is 10 rupee. Or maybe we can say, yeah, 10 rupee. Okay. This area is 100 rupee. Where you will be buying? Will you buy at 100 rupees or will you buy at 10 rupees? Which area you will be buying? Which area will be buying? For example, you are buying the stock, okay, stock or something. Which area will you buy? Obviously, everybody want to buy at 10 rupee, right? Or above 10 rupee, little bit above 10 rupee. Right? Everyone want to buy here. Okay. Similarly, let's see this one. Let's see some proper example. Okay, this is, let's see this one. This is 10 rupee. 10 rupee. Sorry. 10 rupee. And this is 100 rupees. This guy is 100 rupees. And what is this? This is swing point. Do you see this? Swing point. All right. And this is also swing point. Okay. Now, as a human, as a normal trader, we will be like to buy at 10 rupees. All right. Now, nobody want to buy here. Then who is buying here? Who is buying this area? You said, guys, you don't want to buy at 100 rupees. You will be looking for buy at 10 rupee or maybe 50 rupees, 70 rupees, right? Who is buying here? Okay, now is correct. Because it's a break and retest strategy, right? Am I right? It's a break and retest strategy. That's why we are buying. Correct? Now, I have a question for you guys. I have a question for you. If you are, let's say, Mr. Shivam. Mr. Shivam has 100 crores in his bank account. Okay, Mr. Shivam is a billionaire. Mr. Billionaire, okay. And Mr. Samir, he just have only 10,000 rupees in his bank account. 10,000 rupees in his bank account. Mr. Samir has 10,000. Mr. Shivam has 100 crores. Okay. Now, both guys are going to the supermarket to purchase 1 kilo apple. Okay. Supermarket owner saying that 1 kilo apple is 1,000 rupees. 1 kilo apple is 1,000 rupees. Who will buy here? Mr. Samir will buy because Mr. Samir's salary is monthly salary is only 10,000 rupees. But Mr. Shubham has 100 crores in his bank account. Who will buy here? Samir or Shivam? I'm asking, your salary is 10,000 rupees, okay? Your monthly salary is 10,000 rupees. Per kg apple is 1,000 rupees. Will you spend 1,000 rupees for buying apple or will you spend 1,000 rupees for buying your groceries? Right? If your salary is 10,000 rupees, will you be able to buy apple for 1,000 rupees? No, that is not possible because you need to pay home rent, electricity bill. So many things are there. I cannot spend 1,000 rupees for apples. Instead of apple, I could have buy bananas, which is 20 rupees. Right? But Mr. Shivam can able to buy 1,000 rupees apple because he's a crorepati. He has a lot of money. He can buy anything, right? He can buy anything. Anything he can buy. Now tell me, at 100 rupees price, who can able to buy? You are smart money. Because smart money have a lot of money. Shivam will be buying. Smart money will be buying. You should understand one thing. Prices is not matter for the smart money. They have money. They can buy anything. In that situation, they don't look for the price. Nobody cares about the price. Who cares about the price? Right? We will be buying at 10 rupee or looking for 50 rupees profit. Now, one thing you need to understand, smart money can buy at any price. Any price we can able to buy. So one thing you need to understand, whenever a swing high or swing low is broken by the candle, you need to understand, as everyone said, some novice traders, some beginner traders also there here, and the smart money also part of this break. Now, do you see the swing point here? What happened? The swing point is broken here. Do you see that? Do you agree with me, guys? This is the highest point, right? This is the highest point at this area, and this is the previous highest point, right? Okay. Now what happened? The candle is broken. The candle high is broken here. Who have the strength to break the highs? Who has the strength to buy at higher prices? Who has the courage to sell at lower prices? Will you sell at 10 rupees or will you sell at 100 rupees? I will sell at 100 rupees because I want to have the money. Okay. So one thing you need to understand, whenever a swing high is broken, you need to understand that smart money is buying. Okay. Whenever the swing low is broken, smart money is selling. Big guy is selling. Okay. Now, yeah, Mr. Rishabh, I'll talk about that. I'll talk about the fake breakouts also. Okay, I'll talk about that. Okay, and Shivam also I'll explain that. Okay. Now, one thing you need to understand: whenever high broken market, you need to understand that the smart money is involved over there. You cannot buy the high. Nobody will be buying the high. We are not fools, right? We are not fools. Just it's a logical question, right? This is the highest point here. If you are say you are purchasing the vegetables from the vendor, local vendor, roadside vendor, right? Roadside vendor will say the potato is 100 rupees. What you will say? Will you give 100 rupees straight away? No, you will bargain, correct? How many of you guys done this? People will be bargain, right? With the roadside. We will not bargain in the supermarket, but we will be bargaining with the local vendor, right? I'll give you only 50 rupees. Give me 1 kilo potato. Like that only, we will be bargaining. See, it's a common sense, right? Nobody will buy at higher prices. No individual will buy at higher prices. And no individual will sell at lower prices. If you have two-wheeler, if you want to sell your two-wheeler, you'll be looking for selling at costlier prices. You bought two-wheeler for 1 lakh rupee. Now, after 1 year, you are selling the two-wheeler. You will be looking for selling at 80,000 rupees, not 50,000 rupees, right? You'll be looking for higher prices, selling at higher prices. Nobody wants to sell the cheaper prices. Okay, nobody will buy at higher prices. Nobody will sell at lower prices. Then who the hell is buying here? Who is buying here? Right? Who is buying here above this highest price? Now, please understand, when I say highest price, I'm talking about the most recent high. This is most recent highest price. This is most recent lowest price. Who has the strength to buy above this level. Definitely you don't have, I don't have. We will not do this. We will not do this foolish thing. Right? Smart money is doing this. Smart money is breaking the highs and breaking it. Only smart money can able to break the highs. Only smart money able to break the low. Break the low. Okay. Please understand. We have taken the chart. What we are seeing, we are looking for the swing highs and swing lows. Okay. That is what we are looking. Okay. We are marking. Okay. Here we are having swing high here, swing low here. And we have swing high here, swing low here. Swing high here, swing low here. Okay. Now this guy is broken. We cannot break this. That's what I'm trying to say. We cannot break this high. Okay. So smart money involved in this price action. In this price action, smart money involved. Please understand. I'm not saying that exactly they are involved here. Okay. They will be involving in this thing. For example, here you have highest price, which is broken here, right? So smart money involved in this expansion. In this expansion, smart money involved. He can be involved here, he can be involved here, he can be involved here. Anyway, we'll be discussing about that in coming days. Okay. So one thing you need to understand, smart money only can able to break the structure. Now question here is, what is the, see, you told me that it's smart money involved here. Now what is the point? How do I find the trend? Very simple, guys, very simple. Okay. Take recent swing low, swing high, and previous recent swing low, swing high. Now here, this is my recent swing high, recent swing low. Okay. This is also swing low, but both are kind of equal. Okay. So that I'm taking this thing. Recent swing high, recent swing low, previous recent swing low, previous recent swing high. Now tell me whether high is broken or low is broken here. Whether high is broken or low is broken. Everyone able to follow this? If you are not able to get this, getting this whatever and trying, please tell me. I'll explain this once again. Highs are broken. How are you saying? All right. Who cares? Who cares about the market is contraction? Yes, I know that market is contraction, but this is still 4-hour chart, guys. 4-hour chart. So every single candle is your opportunity. Okay. Every single 1-hour candle is opportunity. Whatever market can do, that's not a problem. Contraction, expansion, whatever it can do. Okay. What we are looking for is recent swing high and recent swing low. Now high is broken. Okay. Please note down your notebooks or somewhere. Whenever high broken, when I say high, a swing high. Okay. Whenever the high is broken, market will be going up. Whenever high is broken, market will be going up. Okay. Whenever low is broken, market will be goes down. Okay. Please note down somewhere. I don't think so whether it is there in the PDF. I think I have not included that. Whenever you can say that swing highs are, swing point, whatever. Swing highs are broken, trend is bullish. Whenever swing lows are broken, trend is bearish. Okay, I'll talk about the fake breakout. Okay, don't worry. Bearish. Yes, sir. It is applicable to all time frame. Especially higher. You see, Now we are going to learn the trend of the market. Okay, that is the reason we are using this. So for now, for today alone, you use this for 1 hour, 4 hour, daily, weekly, monthly, anything above 1 hour. Okay, anything above 1 hour you can apply this. But in upcoming days, I'll be telling you how to apply this in other time frames. Okay, for today, you are using this for higher time frame. Okay, now I told you guys broken. What do you mean by broken? What is actually a broken? Broken break means. Now, so far it is clear, guys. So far it is clear. If it is not, please let me know. Or you want me to clarify something? Please let me know. Beginners, are you able to follow me? Clear till now, right? Mr. Siddharth, are you able to follow? Because you said that you have some problems. If you are not able to follow, please. Okay, great. Now I'm going to tell you what is break. Okay, I'm going to tell you that. Okay, sir. Thank you. Okay, now I'm going to tell you what is break. What is exactly break? So whatever we are learning is today is for applicable for higher time frame. Okay, higher time frame. 4 hour, 1 hour, 3 hours, whatever. Right. What do you mean by break? You have a candle, right? This is your candle. Green candle. You have some wick like this. Okay, it can be any candle, any size, anything like that. This is the green candle, and you have one more green candle coming. Okay, and it has a wick like this. Okay? This is one setup. You have one more setup. Same green candle, a long wick like this, and you have one more green candle and have a long wick. Okay, now let me change the color a little bit so that I can see. Now let's add one more wick here at the bottom. So now everyone understand that this is the bullish candle. Both example is bullish candle. Okay, both is bullish candle. Now this is your lowest price. Am I right? Maybe this is 10 rupee. Okay, this is your 20 rupee, and here you have 25 rupees. Okay, all right. So this is lowest price and this is highest price. So market is from 10 rupee to it is going to 20, 9, 11, 12, 13, 14, 15, 20, 25. It reached like this. Okay. Now this is the highest price. This is the highest price. Now this highest price is broken by the next candle. All right. And now this is somewhere around 18 rupees. And it gone up to 35 rupees. Okay. Yeah. Now this highest price is broken and new highest price is created. Okay. Similarly here in this here you also had a highest price here, and this highest price is broken and new highest price is created here. Okay. Whereas there's a difference between the two setups. What is the difference? Do you see here that this is the wick, right? This is the highest point of this candle, and this highest point of this candle is broken by a candle body. Right? Whereas here, the highest portion of this candle is broken by a candle wick. Okay, you can call that rejection, false breakout, whatever. Okay, this is called breakout or break of structure. This is false breakout. This is false breakout. This is not a breakout. This is breakout. This is breakout. This is valid break of structure. Now, see here. This is the wick. The wick is broken by body. Do you see this one? There is a wick high is broken by the body. There is a wick high broken by the body. There is a wick high broken by the body. This candle's body, not this candle. This candle's body. After that, what happened? Just observe the price action. Just observe the price action. Every time the high broken, market has started to go up only. Okay. Every time high breaks, market will be going up. Every time high breaks, market will be going up. Okay. Now you may say that, sir, it's fell down a little bit also. Yes, it will be falling down for the various reasons. Tomorrow I'll be explaining that. Okay. Every time price break the high, it will be going up. So when I say break, a wick is broken by the candle body. Okay. If a wick of the candle broken by the body of the candle, then it is valid break of structure. Now I'll tell you what is structure. Okay. Okay. So you can note it down somewhere. For example, here, let's see here. Do we have an example here? Maybe here. Do you see that? I'm zooming in a little bit. See this one? This is not a break of structure. This is not a break of structure. This is something different. Okay. Yes, you have to see the break. You have to see the break. Only then you can decide the direction. Now, if high broken, I'm deciding the buy direction. If low broken, I'm deciding the direction is sell. Okay. Now, what is structure? What is break of structure? What do you mean by structure? Now, you see here, you see, observe the price action, how price is moving. It started from here, fell down and stopped here, right? It stopped here. Then from there, it just gone above, stopped here. And again, it fell down, stopped here, gone up, stopped here, fell down, stopped here, gone up, stopped here, fell down, stopped here, gone up. Now it's about to decide the direction. Now, everywhere price stops, right? Everywhere price stops. Here price stopped, price stopped, price stopped here, stopped here, stopped here, stopped here. These are all the structural points. These are the important structural points. This either can be a swing point or swing high or swing lows, or you can call this as a structural point. Whenever the structural points are breaking, then market will be deciding the direction. Now, can you see here, most of the time it broke the highs, right? The lows are not yet touched. The swing lows are not yet touched. Okay. So anywhere price stops, that is called structural point. Okay. So far it is clear. Now you may have the doubt, right? Sir, I'm 4-hour chart. I need to wait for this to break. That is long time, right? That is really long time. So I have to wait for that. No, you don't need to wait for that. I don't need to wait for that. Okay. What you can do is, do you see this candle? Why this candle stopped here? Why this candle stopped here? We don't know. This is still structural point. Every candle's high low is your structural point. Every candle's highs lows is your structural point. Okay, every candle, every higher time frame candle. Don't see this in a lower time frame. Okay, every higher time frames candles high and low is your structural point. For example, if you wanna decide the direction, you can decide the direction based on this simple break. However, this bit advanced thing, I'll be teaching you that in the coming days. Okay, how to trade that. Okay, so you can still consider this as a structural point, structural break. But why we are not doing this right now is because, first things first, you need to have the clear direction, guys. So if you mark every candle, that will be creating confusion. So to find the direction, just mark the structural point. Okay, high broken, I'm going to buy. That's it. High broken, my bias, my direction is buy. Okay, I have decided that. Okay, tomorrow I'll teach you how to, where exactly you to buy. Tomorrow I'll teach that where exactly you need to buy, how exactly you need to buy. Okay, for now, high broken, what is the direction of euro USD? It's buy. It's buy. You can say that market is consolidating or ranging in a longer time frame. No one care about that. What is recent price action saying? Structure high is broken. Structure high is broken. This is also structure high. Do you see that there's a small, I don't think so. Okay, we don't have a swing point here. But if you have swing point here, this is also high broken. Market is buying. I'm gonna buy. Okay, just simple as that. High broken, I'm gonna buy. Let's see some different pair. Maybe let's see the CAD, Canadian dollar, Japanese. Yeah. Okay. Let's see this one. What's happening right now? Expansion or contraction? It's look like a contraction, right? It's like that. But just focus your eyes. Focus your eyes. What is happening? Which one is broken? You see that? The swing low is broken here. Okay, that's it. Body is broken. Right? Now what's happening? Price is going up. Sorry, you said it's broken. Then why it is going up? It will be going up for something, and from there it will be coming down. Okay, tomorrow I'll teach that. So first, how do I find the direction? I want to see either high broken or low broken. Now this is not a break of structure. Now this is not a break. Okay, this is not a break. This is break. This is break. This is break. Okay, see this one? This is break. This is break. Okay, so you witnessed this, you are deciding direction as sell. That's it. That's it. You don't need to see last 5-year data, last 5-week data. Okay, you don't need to mark support and resistance here. Don't need to do that. All you need to do is just mark recent break. That's it. Because price is now right now here. What is happening here? Based on that only we are going to sell or buy, not based on the past data. All right, past data is not required. although it is required for different purposes, but for now, just take any chart. Let's take some Bank Nifty chart, Bank Nifty futures. Let's go to the Bank Nifty futures. I think I have taken that. Okay. Now tomorrow, what is the direction? So let's take Bank Nifty. Right. We are in a 4-hour time frame. Let's take the daily time frame. For Bank Nifty, I've used daily time frame. Now what's happened? Structure high broken. Market is buy. That's it. You found the direction. It's a buy. That's it. You will be looking for buying call options. Don't look for the buying put options. Call option. Market is buy. How to buy? Where to buy? That we will be discussing in the coming sessions. Okay. Now, I think someone is asked, raised your hand. Let me see. I think who is raised the hand? Let me see. Raghu, Mr. Raghu, you can ask the question right now. I have given the permission.
Yes, sir. Actually, in the Euro USD chart, I could see many swing lows are also broken. So whenever the swing lows are broken, we will be looking for the sell opportunity. But market went uptrend. So in that case, how to
Now we are not talked about the entry, buy entry, sell entry. Nothing we have done. We just found the direction. Okay. I'll explain that. In a coming sessions. Now you can say that's a good question. Now you can see here there's a high broken here. For example, here there's a high broken here, but market fell down. All right. Similarly, you can see that where somewhere here. Maybe you can see here. No, we don't have that. You will be seeing a lot of lows to grow, lot of low brokes here, maybe here, a low broken, but market goes up. Yeah. Why this is happening, right?
Yeah, because during the live market, we used look at the previous swing low or swing high. So whenever it is broken, we'll be looking for that particular opportunity, right? So
right. But we are not going to buy today. Okay. We are not going to buy. We are not going to sell today. We are just deciding the direction. That's it.
Okay. Yeah.
For buying, selling, we have a lot of criteria.
Okay.
Right. All right. Similarly, you can see here, certain times you may feel that, sir, it is broken the high, then why it goes down? Because there are other reasons we are not covered yet. Okay. We'll be learning that in upcoming days. But now you are deciding the direction. High broken. Now your directional bias is buy. Okay, buy. You are deciding market is buy. Now the problem here is a lot of people having how should I buy or should I sell? That confusion you'll be having. If you are marking support and resistance, right? If you are marking, see, this is the resistance line, correct? One touch, two touch, I don't know. Resistance line. Okay. So what is your bias here? Will you sell or will you buy? You will be selling, right? From here. That is what support and resistance is. It's a resistance line. Price touched here. I'll be selling from here. But I'm telling you here differently. Structure broken, you will be buying. You'll be buying. There is a reason behind that. Okay. There is a reason behind that. You'll come to know that. That's why I told you guys support and resistance not going to work. This is your resistance again. I mean resistance, I guess. Okay. It somewhat worked, but it eventually failed. And this is your support. Or you can say it's a ranging market, maybe. Maybe you can see some support and resistance. That is not working. That will be failing. Okay. That will be failing. We'll be discussing about that. That is the reason I told you guys. Okay. Now, very simple, guys. If high broken, you are going to buy, not blindly. Okay. If low broken, you are going to sell, not blindly. Right. So you are deciding the direction. All right. So let me see. So do we look for the big body candles while breaking the swing? No. Whatever. You don't need to look for the big body. For breaking, yes, absolutely correct. For example, here you have a break here, right? There is no compulsion this has to be big body, but there should be a candle, not wick. There should be a candle, right? Here it's a break, but this is not a break. Where this is not a break. This one is not a break. I'm not looking for this. I'm looking for this, the second one, the big candle. Not it can be big candle, it can be small candle, that doesn't really matter. We want to see that candle break the wick. Okay. Right. Let's see. Does swing or high always mean green candle? No, it's not. It can be any color. Color is not a matter, Mr. Siddharth. It can be any color, any size. That doesn't really matter. Here you can see this is swing high. A swing high is broken. This is a red candle. It can be any color candle. Okay. But we'll be looking for the middle candle, the highest candle or lowest candle or shortest candle. Okay. Right. Now you understand about the breakoff structure, right? Breakoff structure is nothing but you are looking for the any structural point. When I say structural point, swing high, swing low, candle high, candle low, and you can have previous day candle high, previous day candle low. You can choose any of these things. Okay. Now one thing you need to understand here. Whenever you see the big candles like this, you need to understand that this is not you and me created. Okay, you and me can be part. We can buy here. We can fluke buy, we can buy, right? But most of the time, this big candle is created by the big players. Okay. When I say big candles like this, it can be like this, or it can be like continuous candles. Okay. In other words, I have to tell you here. So big candle means a candle look like this. This is also big candle. Okay. Or candles look like this. Like this. Continuous green candles. Okay. Either this kind of big candles or this kind of continuous green candles. Continuous red candles. Continuous red candle, continuous green candle, or big red candle or big green candle. Whenever you see this, for example, see here, big candle, big candle, big candle, big candle. Even though you have a small red candle here, that doesn't really matter. This is called impulsive move. This is called impulsive move. Okay, impulsive move. Market is going very fast, very fast. That is called impulsive move. Now take a look at this green candle. Is this the impulsive move? It's a strong move. It is a move, but it is not a strong move. It's a move. It's just a move. It's a small moves. Whereas this is impulsive moves. Very strong up movement. A violent up movement. Violent up movement. Okay. Very fast movement. Violent up movement. Right. So what you need to understand here is this is called strong up movement. Whenever you see the strong up movement, whenever the strong up movement breaks the previous structure, whenever the strong up movement breaks the previous structure, you can say that market is in a strong buy trend or strong bullish trend, or market will be going bullish further. Okay. Now, similarly, it's just opposite for the bearish scenario. Whenever you see the strong down candles, for example, you can see here. This is you can see a strong down movement. It's not a strong down movement. Why it's not strong down movement? You can see in between you see some kind of candle which is look like a plus, right? Doji kind of candles. Now, what is doji? What is this kind of candles? You see this, the size of the candles. See this one. You can call this a different names. I don't mind. You can call gravestone doji and spinning top. Any kind of you can call the different name. But I am going to tell you this as a inconclusive candle or indecision candle. There is no directional bias in this candle. Okay. Now, this is big candle, guys, right? What is the pressure here? What is the pressure? Bullish pressure or bearish pressure? Green candle means bullish pressure. People are buying. Okay. Here, see this red candle, bearish pressure. See the red candle, bearish pressures. People are selling. What about this plus candle? It's a bullish pressure or bearish pressure? What about the candle look like this? It can be any color, okay? It can be any color. What is this? There is no bullish pressure, there is no bearish pressure. Or there is not at all a pressure. It's like there is no decision. Market don't have any decision. Whether it want to go up or go down, you don't have the decision. It cannot create anything. So that is called indecision candles. Okay, there we have 3 candles, guys. Some of you guys are asking about the candlesticks. Okay, one is bullish candle, bearish candle, indecision candle. Only 3 candles, only 3 type of candles. Okay, and in coming days we'll be learning certain patterns. For that I'll explain about the candlesticks. Okay, we don't have any other candle. There is no hammer, hanging man, doji. No. If you understand the candlesticks properly, you don't need these names. No need to worry about the names. Okay, if you just don't go to the YouTube, search for the candlesticks names. If you do that, it will be confusing. Just stick with bullish candle, bearish candle, indecision candle. Only 3 candles. And day after tomorrow, I'll be teaching you how you can observe the movement of the candle and you can decide the nature of the movement. Okay, if you know that clearly, you will not use any terms. Okay, right. Now, see this one. This is a strong bearish movement. Strong bearish movement. It is not how I am saying it is strong, because you see 1, 2, 3, 4. This is not a perfect, but 1, 2, 3, 4, almost 5, 6 days. It's a daily candle. Okay, 6 days market was bearish. Market was bearish. Okay, so you can say that there is a smart money involved here somewhere, and you can trade that. You can able to trade that. You can able to 1, 2, 3, 4, 5 days. Based on this, you can able to capture next 5-day sell position. Not next, actually, maybe after 1 week, 2 weeks, you can able to capture. I'll teach you that coming days. Okay, right? So this is called impulsive move, and this is not an impulsive move. See, this is a bullish candle. This is also bullish candle, right? See this one. This is also bullish candle. This is also continuous bullish candle. This is also 1, 2, 3, 4 days uptrend. 4 days uptrend market. Do you think it's an uptrend? And what's the difference between these 4 candles and these 4 candles? Right? This is also 1, 2, 3, 4 green candle. Let's forget about the middle candle. 1, 2, 3, 4 candle. Okay, this is indecision candle. This is not an impulsive move. Whereas This has huge volumes, as Mr. Siddharth said. Huge volume, or in other words, I can say everybody's buying. Importantly, smart money is buying here. Smart money is buying here. Okay. So smart money only able to create the impulsive moves. Impulsive moves only they can able to create. Right now, let us take some different chart. Maybe give me the chart. We can see the chart, different chart. Any chart we can see. And some of you guys asked about the gap up, gap down, right? Gap up, gap down. I'll teach you in the day 4. Okay, day 4. I'll teach you about the gap up, gap down. In gap up, gap downs, how we can decide the direction. I'll teach you that in the day 4. Exclusively to the Bank Nifty chart. Okay, don't worry about that. All right, maybe you can give me the pair. GBP JPY. That's my favorite pair. GBP JPY. GBP JPY is a great pair, guys. Great pair. Okay, I have some markings. Let me delete that. So this is a trade I took sometime back along with students. Okay, I have deleted this thing. Okay, now we'll decide the direction. We are in a daily chart. Okay, let's go to the 1 hour. Let's decide the 1 hour direction. Okay, 1 hour direction. Now, what's the direction? Can anyone tell me? 1 hour, it's a buy or sell. It's an easy piece of cake, right? Buy, right? How you told guys? Because it's broke the structure. It's broke the structure. I'm gonna buy. Where I'm gonna buy, how I'm gonna buy, from tomorrow onwards, I'll be explaining. Okay. High broken, I'm gonna buy. Now, can I decide based on the one high break? That is the question here. Can I decide based on one single break? No. I saw this break. I decided, I told you guys buy. No, not like that. I am seeing that so many times. A break happened here, a break happened here, a break happened here, a break happened here, right? A break happened here, a break happened here. Lot of times, you see this? Lot of times it is breaking the high. Lot of times it's breaking the high. So that I'm decided market is buying. Market is in a buy trend. Okay. I'm not just deciding the buy direction based on the single break. I'm deciding the direction based on the previous breaks also. Now why this is important here? Just see this one, the bottom one. What happened here? Low broken, sell, right? Low broken, sell, low broken, sell, low broken, sell. Now what happened? I broken, not exactly, but it is broken somewhere here. Right? Now what I do? What I have to do? And similarly, you see here, high broken here in between. So we'll be discussing about all these things in the coming sessions. Okay. Now, one thing you need to understand, before you conclude that market is sell or market is buy based on the single break of structure, we have to consider a lot of other things. Okay. A lot of other things we'll be considering. In upcoming days, I'll be teaching you that. Okay. So for now, when high broken, you are going to buy. When low broken, you are going to sell. Decide that. Okay, just keep it that in your mind. Okay. All right. Now please understand. We talked about the market cycles. Market cycle is nothing but price will be going expanding. Now, what is expanding? Where nothing, guys. Nothing. Expanding is nothing but here market is expanding to the downside, expanding to the downside, expanding to the downside, and all of a sudden market becomes expanding to the upside. Okay, expansion to the downside, expansion to the upside, expansion to the upside. Okay. So within that expansion, what are the things you are having? So this is my expansion. This is my expansion. This entire thing from here, price started to go down and it stopped here, correct? From here, now please note, we are seeing the past data, okay? Here it started to go down and it stopped here. Here it started to go up and it's somewhat it is doing something here. Okay. Now this is called expansion. This is called expansion. Inside that expansion, you have what? What are the things you are having? Let's see this one. Okay. Inside that expansion, now this is, you can see here, there's a down, there's an impulsive down. Okay, and after that you have a ranging kind of compression. It is called compression. It is not a ranging, it is called compression. Okay, ranging market means it will be like this. If you see the ranging market like this is also ranging market. This is called compression. Why? It's look like a pipe, right? It's like a pipe, the water pipe, right? So price is compressed within the pipe. Within the pipe, it is compressed. Don't call this a channel, okay? Channel is something different. Now see this one. This is compression, or you can call this a choppy market. Choppy market. It's very, very choppy market. It's not a ranging market. It's a choppy market. Ranging market, you can call this as a ranging market. You have some decent down movement, up movement, down movement, up movement, down movement. Whereas this is not a down movement, up movement. It's a choppy market. Similarly, this is kind of choppy. Okay, so impulsive, choppy, and some sort of choppy to the upside. Choppy and impulsive and kind of downtrend. I can say choppy downtrend. This is choppy downtrend, choppy uptrend, and impulsive, choppy, impulsive, again impulsive, ranging kind of choppy, impulsive, ranging, impulsive, impulsive, kind of ranging, impulsive, 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 choppy, kind of ranging, impulsive, impulsive. Okay, so within that expansion, you'll be having impulsive, choppy, impulsive, choppy, impulsive, choppy, impulsive, ranging, choppy, or impulsive, ranging. Okay, right? So now you will be also having something else in a market like this. Let us see this one. Let us take some more choppy market. Okay, let us take some GBP Canadian dollar, some different pair. Okay, right now, yeah, see this one. A strong impulsive move. Strong. This is called the expansion, guys. Okay, from the bottom to top, this is called the expansion. Market is expanding. Within that expansion, you are having and a strong impulsive move, right? Very strong bullish market. Then followed by what? You got the choppy market. Now you may ask, sir, how do I know the choppy will be creating here? Okay, we are just observing the past price action. Okay, we are just observing the past price action. Based on that, we'll be deciding the, we will be concluding the, we'll be finding the future. Okay, so when this happens, when this creating the choppy market or ranging market, I'll tell you how to find that. Okay, so impulsive, choppy. After that, what happens? There's a small impulsive. Then what happened? A small choppy. Then market fell down. It's an impulsive move and impulsive move forward. Now this is, we are called impulsive move. From here to here, we're calling impulsive move. This is called choppy market or ranging market. This is again a choppy market, ranging market. Now, what about this down movement? This down movement. This down movement is called pullback or retracement. Okay, just a word, guys. Don't need to worry about what is retracement, what is pullback. Market was going up, suddenly price fell down. From there, it is again going up. Okay, it is like market is going up, impulsive move, and sudden down movement. From there, it's again going up, and it's breaking the structure. Okay, this is called impulsive. This is called retracement, and this is again impulsive, and this is break of structure. Okay, now typically this is a textbook example. This is their only books. In real market, it will not be like this. In real market can do anything. Market will be going up, range, going down, going up, range, going down. Okay, there is no perfect example like this. There is no perfect example like this. Impulsive, ranging, retracement, impulsive. Ranging, retracement, impulsive. Okay, or sometimes impulsive, retracement, ranging, okay, impulsive, impulsive, and again ranging, retracement, impulsive. It can be like this also. Okay, so impulsive move, retracement, ranging, break of structure, impulsive, ranging, retracement, break of structure, impulsive, or impulsive, ranging, retracement, break of structure, impulsive, retracement, ranging, break of structure, and impulsive. It can do anything. Okay, now what we need to do is we need to focus on the swing highs and swing lows. Swing highs and swing lows. That is key. Whenever swing highs and swing lows broken, we are deciding direction. Now you may see that there is a swing high here. There is a swing high here. There is a swing high here. Which one you will be taking? You have swing low here. You have swing high here. You have swing low, swing high. Which break of structure you will be taking? The extreme one or the middle one? You have to take extreme one, guys. Extreme one. Extreme one. Now, some of you have the question here. Sir, you told me that. Let me take the tool. So there's an impulsive move, retracement, break of structure. Okay, break of structure. Break of structure. So what you'll be doing? You'll be buying, correct? You'll be buying the market. Where you'll be buying tomorrow, I'll explain. Okay? If you are buying, what should be your target? If you are buying, what should be your target? What should be your, suppose you are buying somewhere, you bought here and you'll be targeting here, right? What should be your target range? Suppose you are buying here. For example, you are buying here, okay? Your buy entry here. Yes, 200 points should be your target. But that is different, whatever. That is completely for our psychological aspect. We need to train ourselves, right? That is why I told you 200 points. That is great, Mr. Ansel, for telling that. But realistic target should be this high. you will be having one swing point here. If you are buying here, your target should be this. And please understand one thing. Okay. Please understand one thing. This is the new high, correct? New swing high. This is the swing low, correct? And this is the old swing high. This is the old swing low. All right. So as soon as your swing high is broken, you have to only buy from this swing low to this swing high. You should only buy. You should not look for the sell entry. You should look only for buying. For example, here, this is broke the structure. This is the swing low and this is the swing high. Within this range, okay, within this range, this is the old, this is the swing low, this is the swing high. Swing high is broken. Within this range, you should look for buy only. Don't look for selling. Whatever happens, don't look for selling. Okay, even though you got a breakout structure here, don't look for selling. Okay, you got the breakup structure here. Don't sell. Are you guys getting this? What I'm trying to say is, I'm explaining this once again. You got a breakup structure here and you got something like this. Now, will you buy or sell? This is the range. This is the new high and this is the new low. Will you buy or sell? Because you got a recent break here. Okay, I'll explain this once again. I'll explain this. Okay. Okay. Let me take sorry. Okay, you have impulsive move. Okay, impulsive move, retracement, break of structure. All right, break of structure. Break of structure. Let's mark this as a break of structure. We will be calling the break of structure as BOS. Okay, break of structure, or you can say that BMS, break of market structure. Break of market structure, break of structure. Now this is your swing low. Swing low. Okay. This is your swing high. You'll be having swing high, okay? After some time, you'll be having swing high here. And this is your previous swing high. Or you can say whatever. I don't know why it's not working. Previous swing high. This one. This portion. Okay. Right, and here somewhere you'll be having previous swing low. Swing low will be here. Now it broke the structure. Now this is your the break of structure happened here. Now you have to look for buy entry only within this range, within this swing low to swing high. You should only buy. You should only look for the buying opportunity, not selling opportunity. Okay, you should. When you will be looking for selling opportunity, only when you see the break of structure here. You see that? Only you see the break of structure here, only then you will be looking for selling. Are you guys getting this right now? Okay. Whatever happens here, that doesn't really matter for you guys. It can break so many lows. I don't have any problem. I'm looking for buy only. I'm not looking for sell. I'll be looking for only buy. Okay. So because this is my extreme swing low, or you can say it's my major swing low. It's my major swing high. Major swing high. In between, you will be having some minor swing high, minor swing low, minor swing high, minor swing low, minor swing high, minor swing low. Minor swing highs will be breaking. That doesn't really matter for me. My major swing high is broken here, and I will be looking for only buying the market. Okay, whatever happens here, I don't care. Okay, right? But if you ask me, can I sell from here? Yes, you can do that. We'll be learning that in the coming days. We'll be learning ping pong trades. Do you know what is ping pong trades? Ping pong trade. Anybody know what is ping pong trade? Ping pong trade is nothing but every low will be buying, every high will be selling. Okay, will be like buying here, selling here, buying here, selling here, buying here, selling here. That is called ping pong trade. Okay, we'll be learning that. But for now, what you need to understand is when you see the breakout structure, you are deciding that market is bullish. So you will be only buying, not selling. Whatever happened within this swing high to swing low, you are not going to do anything. You are only looking for buying. Okay, right? So for example, now here, British pound and Canadian, let's see some different. Let's see some what else? Let's see some bank nifty, okay? Or maybe we can see Nifty 50. So why I'm showing this, you can apply this any market. Nifty 50 futures. Okay, now see here. What's happening here? Breakup structure, high broken, market gone above. Okay, now this is your ranging, guys. This is your new high. This is your new high, and this is your new low. Previous high, this is previous high, and previous low, this is right. So now this is your range. This is your low, this is your high. So inside this range, you will be looking for buying the market. Buying the market for the long run. If you want to do long-term investments, you will be looking for buying the market within this range. But however, now you can see low broken, low broken, low broken. Now can I sell here? Yes, you can sell here, but if you are selling from here somewhere, your target is maximum target should be this low. Okay, but if you are buying somewhere from here, your maximum target is above this high, above this high, above this high, guys. Okay, right? So this is your trading range, and now market is bearish in the Nifty 50, but it is not bearish, it is retracing. Please understand that it is retracing right now. If it is broke this low, only then you have to say that market is bearish. Only then you have to say that market is bearish in 1 hour time. Now it is not bearish. Market will retrace somewhere, from there it go up. All right. If it is broke this, then you can say that market is bearish. Okay. right? How long this class would be go? It will be like in the past we have closed the class by 12 o'clock also. I have energy. If you have energy, maybe you can stick with the presentation. But if you are not someone having some commitment, maybe you can exit the class. Maybe you can watch the recording tomorrow. Okay. I don't have any problem extending the time. All right. So, but it's all about you guys. Okay, great, Mr. Siddharth. Okay, Mr. Siddharth is asking, so major low should be broken for bearish market. Yes, Mr. Siddharth. Now you may have the question, what is major, what is minor, right? What is major, what is minor? You'll be having that confusion. Don't worry. In coming days, I'll be teaching it. If everything is I'm giving today itself, then it will be over. Let me ask you this question. If you want a break, maybe we can take some break. We'll come back at 9:30. Do you guys want break? You can take some break. Maybe you can have some food, or some of you guys might be having food right now. I know that. Okay. And also, if you feel that it's really we have learned too much, then let me know. We can stop here. Okay. If you feel that sorry it is too much, please let me know. We can stop here. We can clarify the doubts. Okay. We can continue. No, sir, continue. Okay, great. Okay, no problem, no problem. For me, no problem. Okay. Oh my gosh, 23 messages. Sir, please continue. No, continue. We can continue. It is interesting. Okay, that's great. We can go further. Need to learn too much. Too much. Okay. I know that it is too much, but it is not too much as compared to coming classes. Okay, we have not discussed anything. We just discussed the breakup structure. We just discussed the trend. That's it. In upcoming classes, we'll be talking about the so many things that is really confusing, and not confusing. That is really overwhelming. So I'll try to give. Okay, we can take some break. Okay, we can take some. Let's rejoin after 30 minutes. Okay. We'll take some time, guys. So I want you guys to comfortable, right? I don't want to push you guys. I have no problem. I can continue till 1 o'clock in the midnight, but my wife will scold me. That is the one thing I always fear. And second thing is it's about you guys also, right? So okay, let's take a break. It's 9:16. Can we come back by 9:31? But anyways, I'll be there. We can come back by 9:31 because it is much required. Tomorrow onwards, you'll be required the breaks, regular breaks. Okay, so take a break. Don't exit. Okay, don't exit the meeting. I'm just stop recording for now and pause recording. Okay. Now I'll be sharing this PDF with you guys. This PDF will be having some learnings. I would like to tell you something. Whatever we are discussing, everything will not be there in this PDF, but because sometimes I'll be sharing some important information. I might not include it in this PDF. So sometimes I specifically tell you guys to note it down somewhere. So you can note it down there and somewhere. Okay. So this PDF will be having the assignment also. Every single day we'll be having assignment. You have to. It is up to you guys. You can share assignment every single day, or maybe you can dedicate one day for assignment and you can share the assignments in the group. We want to see all your assignments in the group. Okay, we are having the assignments. All right. So quickly, I'll go through the PDF so that you will understand the thing. So market cycles. We talk about the market cycles. Market cycle will have expansion, and market cycle will be having the contraction. Market will be going up or going down. That is called expansion phase. You can call that as a uptrend markup, downtrend markdown, whatever the language you can use. It's up to you guys. Okay. You can use expansion, you can use uptrend, you can use downtrend. It's a markup, markdown. There are so many languages available. You can use what is suitable for you, you can use. Okay. And similarly, the contraction phase, I have mentioned as a contraction and consolidation, range market, you can call that choppy market, sideways market. Sometimes it's called as distribution. Sometimes it's called as accumulation. Okay. So whatever suitable for you, you can use consolidation, contraction, anything. Okay. There is no rules that you have to use this word, this word, this word. Okay. Whatever suitable. Contraction, if you are comfortable with contraction, you can use contraction or sideways, ranging market, uptrend, downtrend, whatever. Okay. So this is the thing will be happening in the market every single time. Every single time market will go up, go down, contract, go up, go down, contract, go up, go down. That is the thing will be happening in this market. Okay, I have given some example here. What is contraction? What is expansion? Contraction? What is downtrend? I have given some examples. You can note it down. You can see here. And expansion has two things. Actually, four things it has. Impulsive moves, retracements. So I have given some theory. You can go through the theory if you want. Okay. And this is called expansion. This you can see that this is an impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, impulsive move. And this entire thing is called expansion or uptrend. Expansion or uptrend. And impulsive retracement, impulsive pullback, impulsive retracement, impulsive. This entire thing is called expansion or downtrend. Okay, this is textbook example. This is the picture perfect textbook example, but realistically it will not happen like this. Okay, in realistically market will be go like this crazily. Okay, it will be like this only. So this is for an example purpose I have given. And similarly, I have mentioned here continuation of trend and reversal of trend. Continuation of trend is nothing but impulsive, retracement, impulsive, right? And again, impulsive, retracement, impulsive. So there's a breakoff structure, there is a breakoff structure. So this uptrend, this impulsive move, this bullish move is continuing here. That is what we are calling as a continuation of trend. Okay, this is just a term. It's a term. Okay. There is a reversal of trend. I'll be discussing about this in day 3. Okay, day 3 we'll be discussing about this. So I'm not teaching this right now. So day 3 I'll be teaching this. Day 3 or day 4 I'll be teaching this. So again, it's an example: impulsive, retracement, continuation, right? Continuation, retracement, impulsive, retracement, impulsive, retracement, impulsive, right? So example here I have mentioned. And something like reversal of trend, shift in market structure. There are two terms I'm not teaching right now. I'll be teaching that in advanced sessions, in upcoming sessions. Okay. So contraction phase, you know, guys, contraction is nothing but. Now you can see here, down movement, up movement, down movement, up movement, down movement. Tomorrow we'll be learning about this in a detailed manner. Okay, contraction phase we'll be learning tomorrow in a detailed manner. Okay, so market is stuck inside certain level, that is called contraction. See this one? This is simply choppy market. You can call it the contraction, choppy market, whatever. And contraction, choppy market. Right? This is the contraction phase. Now you may ask, which one is exactly I need to mark? Should I mark this? Should I mark this? Should I mark this? Should I mark this? You don't need to worry about those things. You can mark entire thing in a one box. That is called contraction. You don't need to worry about it because it's a past price. Okay, tomorrow we'll be discussing about the contraction phase in a deeper manner. Okay, there are different names you can call this. And you can see here expansion, contraction, expansion, contraction, or you can say impulsive contraction, impulsive contraction, impulsive contraction. This will be continuing. Okay, out of in markets, most of the times you will be having 75, or we can say 60% of time you will be having contraction. Only 40% of time you will be having expansion. So people always feel that we cannot able to trade in the contraction or consolidation market. It is not like that. Contraction or consolidation phase is really important phase. If you able to find certain things in the contraction phase, you can able to capture the big impulsive. You can able to capture the big impulsive. So tomorrow on the coming days we'll be learning that. Okay. So let's talk about the market structures. So if you are talking about the traditional way of market structure, traditional way, if you go to Google, YouTube, search market structures, what you will be getting is higher high, higher low, higher high, higher low, lower low, lower high, lower low, lower high. And most of the students asked me, sir, how do I mark higher high, higher low? Is there any indicator to mark higher highs, higher lows? Okay, that is the only one reason I am not teaching that higher high, higher low. That is not required. I'm telling you this, that is not at all required. Higher high, higher low, lower low, lower high, higher low, like it's confusing. Am I right? Some of you guys using that, you know that it's confusing. Higher highs, higher lows, lower low, lower highs. Which one is lower low, which one is higher high, which one is, that is confusing. So that is the reason I replaced that higher high, higher low. Instead of that, I just told you guys to mark the swing highs. Swing highs. Here you can see this is my swing high, swing low, swing low, swing high, swing low, swing high, swing high, swing low, swing low, swing high, swing low, swing high. That's it. Don't call this higher high, higher low, lower low, lower high, lower low, lower high. Confusing. Okay, that is confusing. But it's up to you guys. You can use that also. So you may not come and complain me that you didn't teach me higher high, higher low, right? So that is the reason I have included that in the market structure thing. Okay. So what is market structure? Market structure is nothing but when price reacts certain levels or points, that is called as market structure. For example, swing points, retracement levels, range highs, range lows. Every candle high and every candle's low is called market structure. Remember, what is market structure? This is swing high, swing low, market structure. Price fell down, retraced, retracement, retracement low, market structure, retracement high, market structure. Price is ranging. Where exactly it is ranging? Let's see some example. So, for example, here you see the ranging. Yes. Okay. This is my range market. This is my market structure. This is my market structure. This high is my market structure. This low is market structure. If the structure is broken, I'm deciding the direction. But although for ranging market, it works differently. But any high, any low is your market structure. Now here, this is your structure. This is your structure. This is your structure. This is your structure. Structure broken. Structure broken. Structure broken. Structure broken. Okay. Structure broken. Structure broken. Structure broken. structure not broken. Okay, not broken. Similarly, structure broken, structure broken, structure broken. Okay, you can mark like this, or you can say that structure broken, structure broken, structure broken, structure broken, structure broken, structure broken. Every candle, structure broken. Every candle is a structure broken. It is confusing. Okay, don't do the every candle thing. Structure broken, structure broken, structure broken, structure broken, structure broken, structure broken, structure broken. It will be confusing. So that is the reason we are sticking with swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. The best part is we are sticking with the extreme swing high and extreme swing low. If extreme swing high is broken, we are deciding market is bullish. Like that, okay. So typically you can mark anything as a breakout structure. But why we are using swing points? Because the swing points are the major level where the smart money involved. Okay, smart money involved in the swing points. That is the reason. All right, now. So here, how we can identify the market structures? So I have given the traditional method: highs and lows, higher high, higher low, lower low, lower highs. Okay, it's very boring thing, but still I wanted you guys to aware about these things. So at what situation you will be saying market is bullish? When the high broken, market is bullish. Okay, when the low broken, market is bearish. That is a simple thing I have told you guys. But traditionally, how the people are teaching the market structure is this way. That's why I showed here. Okay, suppose here is a 10 rupee, here is a 20 rupee stock. Now 20 rupees is high price than 10 rupee, right? So 20 rupees is higher price, 10 rupees is a lower price. We are saying that this is the high, this is the low, right? Now all of a sudden what happened? Prices just fell down. It's fell down like here, and it created 15 rupee here. Now 15 rupee is higher than 10 rupee, right? 15 rupees is higher than 10 rupee, but lower than 20 rupee, lower than this. So this is definitely higher than the previous low, right? This is definitely higher than the previous low. But obviously, this 15 rupees is lower than 20. So we are calling them, this is definitely higher than low, but it's lower than this high. Okay, this will be confusing. This will be confusing, but this is how other people are teaching. Okay, so you can follow this, or you can simply follow swing high broken, fine. Swing low broken, set. You can use that method, or you can traditional method. This is the traditional method. Okay, now here this high is broken. Price created at 25 rupees here. Okay, 25 here. Okay, 25 rupees. All right. Now, this is definitely higher than this, everything. It's higher than everything else. So I can say that this is higher high. It's a higher high. Okay. So that where you are saying it is not broken the high. Here. This one you are saying it is not broken. So previous one. Here, somewhere here. You are saying. Or here you are saying. I don't know. You are saying 1, 2, 3. Which one you are saying? or this is 3, this is 4. Which one is it? Second one, okay. Second one, third one. This we're saying, right? Here, this is swing high only. It's broken. It's swing high only. It's broken. Okay, but this is my extreme swing high. You need to understand. This is my low. Why I am saying this is extreme? The reason is, guys, you can see this the big bullish movement. Who can create this big bullish movement? Only smart money can create this big bullish movement. And somehow price stopped here. Somehow price stopped here, and somehow price stopped here also. And after that, price started to go down. It broke the low, Now, I know that this is my strong up movement, and previously some high would have been there here. It broken here like this. Okay. So I will be definitely buying within this range. I will not look for selling. So I'll be looking for this high to break. I want to see this high to break. Even though it's broke these guys, that doesn't really matter for me. I want to see this one to broke. This one to broke. Okay. Only then I'll be buying. Only then I can say that, okay, market is truly bullish. You can say it's bullish, but whether it's truly bullish or not, it has to break the swing high. Swing high. Major swing. Okay. So you can ask, sir, can I still trade with this thing? Yes, you can trade, but under certain circumstances. I'll be teaching you that in the coming days. Okay. So we are calling that is the low, and we are calling this the high. Why? Because it's the lowest price and this is the highest price. And highest price is broken and new highest price is created. So we are calling that as a higher high. Okay. And again, it's broken. We are calling that as a higher high. Now you can use this or you can avoid this. It's up to you guys. Okay. I don't have any problem. You don't need to mark these levels. High, higher high, lower high, lower low, lower high. Don't need to do that. Simply, this is my swing high and it's broken. I'm gonna buy. That's it. This is my swing high. It's broken. I'm gonna buy from X, Y, Z area. And you'll be having swing high. It's broken. So I'm gonna buy. I don't know whatever happens here. I don't need to worry about whatever happens in between. Okay, major swing high, major swing high. Right? So after the swing high broken, where to enter the buy? Tomorrow. Tomorrow I'll teach you that. Okay. We are deciding the direction. We are deciding the direction. Okay. We are not buying. Please understand that. We are not buying blindly. Okay. Right? Shivam, Mr. Shivam, you witness this. I'm not going to give you the accuracy. You will see the accuracy after the end of this bootcamp. Okay. I know that you will be having a lot of questions, a lot of doubts, but end of the bootcamp, you will see the accuracy. I'm not going to exaggerating anything. You will see by yourself. Okay. Right. Now, simple. You are looking for break of high. You are deciding the direction. Okay. Similarly here. Now my point here is, sir, guys, please understand. You don't need to do this lower high, lower low, lower low, lower high. Don't need to mark this kind of things. Okay. That is what I'm telling you. Okay. So after it broke the structure, then market going back to fill the gaps, to fill the gaps. What is this? We don't have the gap here in the Forex market. We'll be having the gaps in the what do you call it? Stock markets. I'll teach you that. I don't want to give you everything today itself. Okay. I don't want to overdose you guys. That is the reason I'm not able to answer your question right now. I can give you, but others will not understand. Okay. Gap up, gap down, imbalance filling, everything will be there. Okay. Everything will be discussing. Weekend now, Shivam sir, recently, I have to tell you, since from the Russia-Ukraine war, right? You had a Russia-Ukraine war. From that point onwards, we had a weekly gap up, weekly gap down in Forex market. I mean, weekend. weekend gap up, week out down. But earlier it was not the case. Okay, earlier, even though in the weekends, very rarely the gap up, gap down will be happening in the forex market. Now, one thing I would like to tell you here, if the weekend gaps are happening the early morning 2 a.m. 2 a.m. Are you going to trade at 2 a.m.? 2 a.m., 3 a.m. early morning of Monday. How many of you are ready to trade at 2 a.m.? Why are you stressing yourself? Don't trade that time. Okay. Okay, you will be trading on evening 7 o'clock, 6 o'clock. That is the thing. Don't need to trade. Only Mondays you will be getting this good movement at 2 a.m. but not every single day. Not every single day. So if you are someone want to capture the opening movements, then that is works only on Monday early morning. Okay. If you are ready for that, you can do that. I'll teach you that, because earlier we used to do that early morning 3 o'clock. We used to trade, but that is no longer required right now. That is not required. I don't suggest you guys to trade on Monday. If you want to trade the forex market, Tuesdays, Wednesdays, Thursday, and sometimes Friday also are very good. Tuesday, Wednesday, Thursday. That is the good thing for trading the forex market. Okay. If you want to trade Mondays, Monday evening session you can trade. New York session you can trade. And Friday also evening session will be great. Friday evening session will be great. Remaining days, if you are looking for early morning trades, then that is unfortunate, I have to tell you, because we have a strategy called Asian range strategy. We'll be learning that. Okay. That's why, that is the one reason, Shivam sir, I'm not saying that don't trade early morning. Why the early morning spreads are really, really high? The reason is early morning, not early morning. There is a zone called dead zone. Dead zone in the forex, which starts from, I cannot clearly tell you, but 1 a.m. to 3:30 a.m., 3:30, 4 o'clock. Till 3:30, 4 o'clock, you'll be having dead zone. Okay. So in that particular dead zone, no brokers, no country is working. There is no New York session. New York markets will be closed. London market will be closed. Asian market will be closed. Australian market will be closed. No market is functioning during that particular time. That is called dead zone. Why I am saying 1 a.m. to 1 a.m. to up to 4 o'clock, you can say, because sometimes it will be changing, right? If you know the daylight saving time, if you are working under the IT companies, you know the daylight saving time. There's a term called daylight saving time. Okay, the countries like America, Norway, and Australia, the sun will be rising very soon, and it will be setting very early. Evening 3 o'clock itself, sun will be setting. So during the times you will not, your markets will be closed. So you will not have the volume. So at the particular time, nobody is operating. When no one is operating, the market will be, there is a term called IPDA. Okay, IPDA, interbank price delivery algorithm. Interbank price delivery algorithm, not interbank IPDA. Okay, interbank price delivery algorithm. What do you mean by that? Guys, forex market is not a centralized market. It is don't have exchange. In stock market, we have Bombay Stock Exchange, National Stock Exchange, like London Stock Exchange, right? We have different stock exchange. Whereas in this forex market, you don't have the exchanges, centralized exchanges. Interbank price delivery algorithm. That is some sort of algorithm. It is not a algo trading. Okay, it is some kind of software, or I can say that it is some kind of the background behind the forex market. There is a forex market, behind that the interbank price delivery algorithm is there. So this particular delivery algorithm will be resetting during that dead zone. The software will be taking rest. In other words, you can say software will be taking rest. If you have the Wi-Fi in your home, when you go sleep, you will be switch offing the Wi-Fi, right? So at the time, Wi-Fi will be taking rest. Similarly, during this dead zone, the market will be taking rest. The software will be resetting its algorithm. So when it resetting its algorithm, usually the spreads will be higher. Market will be going crazily. Okay. So that's why during that time you should not trade. No one should trade. That is the only one reason I don't suggest the swing trading in the forex market. That is the one reason. Second reason is there is no requirement for swing trading, because per day you can able to make 200 to 500 points. If you are able to make 200 to 500 points, that is very decent. So you don't need to hold your position for the next day. That is the second reason. Okay, so during the time we should not trade. That is what I'm trying to say. I'm trying to say here. Okay, right. So we talked about the breakup structure, right? Whenever the structure breaks, we'll be selling. We'll be selling. We'll be selling. Okay? From where we'll be selling, how we'll be selling, how much stop loss will be put, how much target will be covering, we'll be learning from tomorrow, day after tomorrow, we'll be learning those things. Okay, market structure, breakout structures or breakout market structure. When price breaks the swing points, okay, swing points or swing highs, swing lows, or any other structural point, it is called as BOS and BMS, breakout market structure, break in market structure actually. Okay, every time price breaks the swing highs, the swing low or swing lows, it tends to continue that direction. Okay, breakout structure helps you to find the direction of the market. The major thing is breakup structure. If you find the breakup structure, if you can able to spot the breakup structure properly, you can decide the direction. Now please understand, guys, please practice this breakup structure thing for upcoming days. Okay, because it is not only for finding the direction, but it's also gonna help you for something else. Okay, so put a lot of effort to find this thing. Very simple. Very simple. What you need to do is just go to any chart, open any chart, any market. Let's take some different market. Let's take some crude oil. Okay, crude oil futures. Okay. Let's go to the USI. Let's take the USI. Okay, then you can see the MCX, right? USI, what's happening right now? Broke the structure. Market is selling. That's it. You decide the direction. Why I chosen this? Because this is the major, right? From here it started, it fell down and it gone up a little bit. It broke the highs here a little bit. And again it's fell down. Right? Do you see this? See, it was falling down here. It stopped here. From here it gained momentum. It broke the structure. And again it fell down. So this is the major level. This is the major level. And this is the new level. This is the new level. Okay. New high. Old low. New low. So I'll be looking for selling. That's it. I'll be looking for selling. Whatever can happen here, breakup structure, whatever can happen here, I don't have any problem. I am looking for selling somewhere from here, somewhere from the within this level. Okay, so like that you can decide. You can decide the direction. Now let's go to the thing, and please note on this. It is already there. BOS is considered only when body of the candle breaks the wick of the candle. Okay, the candle wick should be broken by the candle body. Only then it's a breakup. A wick breaking the wick it's not a valid breakout structure, but it's something else. Okay, it is something else. We'll be discussing that also in the future, near future, right? That I have given. And breakout structure I have mentioned here. Now this is called breakout structure, breakout market structure, breakout structure. So breakout structure, breakout structure, breakout structure. You don't need to mark lower low, lower high. That is not required. Okay? And we have shifting market structure. We are not going to discuss this today. We'll be discussing this some point of time in a detailed manner. Shifting market structure is nothing but when market change its direction. Okay, breakout structure is telling you the whether market is in a bullish trend or bearish trend. Shifting market structure will tell you whether market trend is changing or not. Okay, we'll be learning about this in a detailed manner in coming days. Okay, I'm not teaching this right now because I don't want to confuse you guys. Confuse you guys. So that's why, and also it involved certain other advanced things. So I'm not going to teach this right now, but you can go through. It is there in the PDF. You can go through what is exactly I'm trying to say here. You can go through that. Okay, so right now you can ask your questions. If you have any questions here, anything is not not answered yet, you can ask. We have assignments here. Now you can see the assignments. So I mentioned here, take a Euro USD chart at 15 minutes time frame. Okay, 15 minutes time frame. I told you guys to mark higher high, higher low, lower high, right? You don't need to mark lower low, lower high. In a 15 minutes time frame, just mark the breakout structure. Okay, just mark the breakout structures. Similarly, gold chart at H4 time frame, you need to mark expansion and contraction. What is expansion and what is contraction? You need to mark. Very simple, right? Expansion and contraction, nothing but very simple. You can say expansion. Any charts you can take. Expanding and retracement, some contraction, expanding, retracement, contraction, expanding, some kind of contraction, expanding, retracement, right? Expanding, contraction, like that. You need to mark. So how do mark? You have a lot of drawing tools here. Like you can see this trend line, like a lot of drawing tools here. You can choose, or you can take, there is a box here, rectangle box. You can say this is my expansion, and you can say this is my contraction. Okay, and you can say expansion. Okay, I can say expansion, contraction. Okay, you double click here and you can type it here, contraction. Like that, you need to do and take a screenshot and you have to share in the WhatsApp group. If you don't know how to take the screenshot, you have there's a picture, there is a camera option here, right? Take a snapshot, click this. You can save the image in your desktop and you can share in the group. Or if you're using mobile phone, you can take a screenshot, share it. Okay, or you can use the sniping tool. There is a sniping tool available in the Windows. All platform is available. I'm using Windows 7, so you can use that sniping tool. You can snipe it out and you can share. Okay, because this is mandatory. Because the thing is, I told you guys, you have to follow what are the instruction I'm giving you. So you have to follow. So take your own time. There is no rush. You need to share this tomorrow. But if you're sharing tomorrow, we can discuss that before we start tomorrow's session. Or you can take your own time. You can share within this bootcamp is complex. Okay. Similarly, I have given here mark expansion contraction phase and take a GPP JPY chart, mark breakout structure. So eventually you are going to mark breakout structure here and here. Two things you will be doing breakout structure. So why I mentioned Euro USD, why I given gold, why I given GBP JPY, because these are the pairs I personally trade, and These are the pairs enough for you guys. Although gold is not for beginners, but Euro USD, GBP, JPY is enough for you guys for trading the market. Okay. If you ask me which pair is good, which pair I can trade, GBP, JPY, Euro USD, GBP, USD, that is great. Okay. And I'm kind of planning to do one thing tomorrow. Tomorrow, when we open the session, I will give, I will ask someone you to volunteer to mark the, what do you call it, expansion, contraction, breakup, structure, everything. Okay. So I will not pick you guys. You can volunteer yourself. You will be marking. I'll give you the access to you guys. You'll be marking. Okay. If nobody comes, I'll pick you guys. I will choose you how to do this, you how to do this. Okay. So because this is the something I was planning to implement for the last bootcamp, but I couldn't do that. But at least from this bootcamp, maybe I want to know your what do you call it, view. We learned something today. Tomorrow I'll be testing you guys. Okay. There is no need to shy, or there is no need to feel bad about the wrong marking, right? Because everyone is learning, whether you're experienced trader or beginner traders, that doesn't really matter, because we have to face certain things to become to grow, right? So we can do that, right? Only if you are agreeing with me, we can do that. Or if you felt that it's kind of embarrassing for you guys, we don't want to do that. Okay, right? Because it's not school, it's not college. We have to be. We are going to do business, right? So that's fine. Okay, recording will be given most probably by tomorrow's afternoon, because the thing is, most of the time the recording will get delayed because of me only, because I'm taking much time to complete the session, so processing time will be taking. So that is the only reason recording will be. If you get delay recording, that is the only reason. Okay. MT4, MT5 isn't it available for iOS? It is there, sir. I guess it is there. Though I don't use iOS, but it is there. Most of the brokers offering that. Yeah, it is there. MT4 for iOS, it is there. You can download MT4 for iOS. Yes, it is there. It is there. iOS, Linux, and Android are all platforms available. Okay. Yeah, we want interactive sessions. That is the reason. Which time you prefer to trade? I morning itself I close my positions. Right. I was trading the newer sessions before. Since last year I was doing that, but when I started this mentorship program, I couldn't able to trade the newer session, because all our mentorship programs start by 7 o'clock, right? So if I open the trade by 11 o'clock in the morning, and it will be closed by 2 o'clock afternoon maximum. Sometimes it will be closed by 4 o'clock, right? Yes, we are going to learn a Asian session strategy. We'll be learning that. Can we do live trade for some time? We are having dedicated session for live trading. Okay. We will be doing that during this bootcamp also. But apart from this bootcamp, after 7 to 8 days, after 1 or 2 weeks, we'll be having dedicated live session only for live trading. Okay, there we'll be taking a lot of trades. Okay, but during this bootcamp also we'll be trading. We'll be taking some demo trades and some real trades also we'll be taking. Which session is good for the beginner? But first things first, it depends upon your timing also, right? Some of you guys, most of you guys are office goers, so you'll be having only evening times to trade. So in that situation, newer session is kind of volatility is high, but it is I'm not going to say it is good for beginner, but it is good for overall trading. Newer session. But London session, it's really good. It's really good for the beginners. London session, you may not have the crazy movements, but you'll be still having the movements, good movements. Okay, but New York session will be having the crazy movements. From morning 11 o'clock, to midnight 12 o'clock or 11 o'clock, it's a good time for trading the Forex market. Now, don't ask me, can I trade in the early morning? Yes, you can still trade in the early morning, 4 o'clock, 5 o'clock, 6 o'clock. That is also very good. But not all the time you will be getting the crazy movements. You'll be getting the small movements. Except Monday, rest of the days you will not get the good movements. Okay. If you want a good movement, quick movement, then from morning 11 o'clock, 11:30, exactly 11:30. It's good. Okay. Which session, which trade, which pairs to be traded? Okay. One thing you need to understand: Japanese pair. All Japanese pairs. If you are trading Japanese pairs, you want to trade the Japanese pairs, Asian session, morning, early morning, 4 o'clock to 11 o'clock. That is good. But any other pairs like Euro, USD, and USD, Canadian dollar, USD CHF, USD, what else? Australian dollar, US dollar. And these can all US pairs you can trade in the morning 11 o'clock to midnight also. Japanese pairs kind of you can still trade Japanese pair in the US session, New York session, but Japanese pair is kind of crazy sometimes. So especially if you are trading Japanese currency with other minor currencies like Canadian dollar, sorry, not minor currencies, Canadian dollar, some slow moving pairs. If you are trading those currencies, you have to trade it in the Japanese session. But my personal suggestion is any pair, it is suitable for New York session. New York session, you can trade any pair, even though it's a Japanese pair, you can trade. But don't trade the Japanese pair in the European session. Okay, European session. Anything which start from the JPY, okay? Base currency is a JPY. Okay. Sir, can we get do regarding can we get to the regarding this time? I'm not understanding Mr. Sid. Now I have to tell you there is no specific pair you have to focus. You don't need to focus on any specific pair because the Forex pairs is always crazy. It is always crazy. Okay, it can react at any point of time. Australian dollar, New Zealand dollars, morning you will be having a lot of movements. Same Australian dollar, New Zealand dollars, you will be having movements in the New York session. Now it's about the price action, guys. It's about the price action. If you see the crazy movement in Asian session, then you will be seeing the next crazy movement in New York session. You will not see the movement in the European session. Okay, if you see the crazy movement in the European session, you will not see the movement in the New York session. You'll be seeing this movement in the Asian session. If you see the big movement in the US session, then you will not see any movement in the Asian session. You will be seeing the movement in the next day European session. So it will be based on the price action. When I discuss about the price action, when we discuss about the advanced things and all, I'll tell you that. Okay, you can get the document. There is a Forex converter, time converter. There's a website called Forex time converter. After the end of the session, I'll share you that thing. Okay, you can see that. All right. So, sir, it is there in the. I'm not sure whether it's there for the mobile application, but it is there for the PC. I don't know. I'm not using iPhone. Okay, I'm just using OnePlus. Yes, we can get the documents, timings. I'll share you the Forex time converter website where you can see what is the time the New York session opens, what is the time London session opens, what is the time European session opens, what is the time Asian session opens. And believe one thing you need to understand, these sessions timings, whatever websites are giving, that is our not exactly, because as I told you, now everything is changing. The sunrise, sunsets are changing all around the world. So based on that, it will be changing. Opening time, closing times also will be changing. When I say opening time, closing time, it is not about the Forex opening. It's about the stock market opening. Okay, London stock market opening, New York stock market opening, Canadian stock market opening. That timing only we are discussing. Okay, so that is what we are referring as a session trading. All right. So any question, guys? Anything is unanswered? Anything is not clarified? Anything you want to clarify, or anybody want to speak with me? Maybe you can raise your hands. Okay. Now today, whatever we learned is just a piece of thing. Okay, it's a small thing. Tomorrow and day after tomorrow and coming days we'll be learning. I'm going to give you overdose. Okay. So that is, be prepared for that. Okay. Be prepared for that overdose. For now, what you can do is you can practice in the tradingu.com. Why? Because trading is really easy to understand, and you can do analysis for now. But eventually you need to jump into the MT4 or MT5. The thing is, because our real trades will be taking in the MT4 or MT5. TradingView is not going to support. Although some brokers are supporting the TradingView, but most of the brokers don't support. So my suggestion is, it's up to you guys. You can practicing in the MT4, that's fine, so that you will not have any trouble in the future. But my suggestion is always do analysis in the TradingView and take trades in the MT4. Okay, that is how we have to do it. Bro, you said in the master class, no SL, number of SL more than 8 pips. How is that, sir? I got to wait for the day 6. Okay, day 6 I'll tell you that. Day 6 I'll tell you that how you can, not 8 pips. I 5 pips I told you guys, not 8 pips, 5 pips. You can put 5 pips stop loss. That's what I told you guys. But you have to wait for the day 6 or day 7. That is possible under the one circumstances. If you are trading with a broker who's having 0 spread account, if any brokers offer you the 0 spread account, you can put 5 pips stop loss, 8 pips stop loss, 10 pips stop loss. You can do that. Okay, but if you're trading with OctaFS, XNS, that kind of brokers, you cannot put that stop loss because that is kind of riskier. Okay, we'll be learning that. I'll be teaching you that. Can they operate it from the mobile? Yes, sir. You can operate. You can operate the MT4 in the mobile, but MT4 mobile is really kind of, some people like, some people don't like. The user interface is really bad, sir. MT4 and MT5 is really bad. So, but we don't have any other option. We have to trade with them. All right. Can you share all full PDFs in advance so that we can know? I will not. I will share you today. Today I'm going to share it with you guys, but let's learn one by one, right? I don't want to. You can take a printout or whatever you can do. Might be some typo errors also will be there. Okay, so I have to point out those typo errors also. So I'm not going to give you all those things, but eventually you'll be getting all those things. Okay, it's for you guys only. Okay, but I don't want anything. I don't want to reveal the suspense, right? If I reveal everything, then nobody will be concentrating my bootcamp classes. So I'm a selfish guy, right? Great, sir. Great page. Page shame, all right. I'm sorry if I mispronounce your name. Why there are the long candle? Okay, why there is a long candle? Long candle means a lot of people involved, or I can say big players involved. That's why the Forex is always have the long candle size. If you see the We compare with the stock market or any other markets. Forex candles are really, really big candles. The reason is there are that much money involved in this market. Everybody, see, the reaction time is like this. If you see the big, small red candle, everybody started to green candle, everybody started to buy. It will be creating the big. I mean, what I want to tell you is, people are reacting to the buy sell movements. Not only people, but smart money also. Smart money also involved in these candles. Okay, tomorrow, day after tomorrow, you'll be learning why, what, where, everything will be learning. Okay. Can TradingView MT4 can be operated from the mobile? Yes, you can do that. You can do that. You can download the tradingview.com website, the application from the Play Store into the mobile. You can do that. But if you have the big screen mobile, then analyzing the market will be good. If you have tablet or maybe Chromebook or maybe big screen mobile, you can do that. Otherwise, it's a hectic job. But I have to tell you this: when I was working under the company, when I was working under one investment company, actually, I cannot reveal the name, where I have a like it's a kind of a foreign bank. Okay, foreign bank. I was working under the Asian shift, morning shifts. Okay, so I reach office 6 o'clock in the early morning. Okay, my supervisors, everyone will be coming by 8 o'clock. So when I reach the office, I immediately opened the what do you call MT4 platform in the mobile phone. I used to trade. Okay, when they came, I closed everything. 8 o'clock, we'll be going for the breakfast. At the time, I'll be closing all my positions. Like that only I have learned. So why I'm saying this is because some of you guys may thinking that, sir, can I trade in the Asian session? Yes, you can still trade in the Asian session, but you have to wait for the target to reach. You have for capturing 200, 300 points, maybe you need to wait for at least 2 to 3 hours. That is the one problem with Asian session. But it's a very good learning curve for you guys. If you are trading with the Asian session, it is a really good learning curve. Okay. Difference between MT4 and MT5, it's nothing, sir. It is like difference between Android versions, right? You have different version, Android 1, like Android 10 kind of thing. There is some user interface they have given, something they have added, some beautification they have done in the MT5, like it's a kind of some software improvements, not much difference. But if you are an indicator based trader, if you want to trade using indicators, or if you want to try out certain algo bots, MT4 has a lot of resources because MT4 has been there long time. MT5 is recently developed. I think about 5 years before only they have bring the MT5. MT4 it's been there long time, and you have a lot of resources, free resources available all around the internet. So if you're using MT4, you can avail that resources. MT5, slowly the community is developing. People are making the algos and indicators and other things. But in our case, we are not going to use any indicators. We are going to trade with a pure price action. So you can use MT5 or MT4, whatever. It's up to you. We should take trades MT4 PC or a mobile phone. It's up to you, sir. I personally use the PC and laptop. I don't use the mobile phone, but the reason is I do analysis in the I want to see the big screen, right? So it depends upon you. I'll be comfortable with by seeing the big screens. I'm not comfortable with trading in the small screen. But suppose if I open some position, if I'm going outside somewhere, I'll be using my mobile phone to close my position or trial my stop loss. So that is the only one thing I do with this thing. But similarly, you can do that. I know some of the guys only use mobile phones. They only use mobile phones and they become expert at that. But I'm not expert using the mobile phones. I cannot trade using the mobile. Because ever since I was working at the proprietary firm, we used to see multiple screens, 2 to 3 screens. When I used to have that mentality, so I cannot jump into the the mobile phone. So if you're practicing with the mobile phone, that is great, great. You can simply trade anywhere, anytime, right? So that is good thing also. All right. After this boot camp, what you need to do is you have to practice in a demo account first. At least 1 month you need to practice. See, whatever I'm telling you is, I'm not saying that you have to follow me, but if you follow me, if you take some time for learning or making money, everything, then that is good. In my personal opinion, that is good. After the boot camp, you have to practice at least 1 month, 1 or 2 months in a demo account. Then you need to jump into the real account. Now you can open the real account with any broker or any XYZ thing, the small capital. You need to trade in the real market also. Finally, you have to jump into the funding platform. So in my opinion, you need to at least take 2 to 3 months practice, then only you need to jump into it. Okay, that is how I tell people, and those who followed me, they are making money and they are clearing the challenge. They are succeeding. Okay, I'm not saying that because of me, it's because of they followed that step-by-step thing. Okay, and other people, they already have some exposure, experience with the real markets. Like some of you guys having experience in the real markets. So for those you guys, maybe you can 1 or 2 weeks you can practice, then you can jump into the real market, or maybe after learning the real market, you can jump into the funding platform. Okay, it's purely up to you guys. But if you're a complete beginner, please follow what I'm saying. That is my humble opinion. And if you don't follow me, there is no problem with me. Because I cannot always what do you call it? I cannot always pinpoint you, do this, do this, do this. I can tell you this, following or not following, it's up to you. But I'm telling you this, eventually you will come to my track. Eventually you'll come to my track. Okay, you will do your own thing, then you will come to me, and it's not working, what I have to do, like that. That's why I'm saying you can follow me. Whatever I'm telling you, can follow me. There's one person from the previous batch. He told me that, sir, I don't care about making money. I want to spend at least 6 months for the practicing. After 6 months, can I trade in the funding platform? I told him, yes, you can do that. He don't have any problem with practicing or other things. But some of you guys maybe have the commitments. Like, I want to make money, like that. So for you guys also, I'm telling you, at least 1 month you need to practice. Then you can jump. It's like, it should be a natural process, right? I can, if you don't know swimming, I cannot push you into the ocean, right? I'll tell you to swim first in the swimming pool, right? Which 4 feet, 5 feet swimming pool, where you need to learn first. And after learning this swimming, then you can jump into the ocean. But if you ask me, I have learned the concepts, I want to jump into the ocean, then it's up to you guys, because you are not taking enough practice. Okay, so yes, there's a few examples. There are guys who, after the boot camp, who directly jumped into the funding platform, who cleared the funding platform challenges also. It depends upon the person to person, depends upon the how much the grasping power you are having, right? For me, I'm telling you my example. After learning the smart money strategy, I took at least, I think it's been almost 5 months for me to mastering the thing. I took 5 months practice, and believe me or not, after 5 months, after trading the market, when I jumped into the bank nifty, okay, for that I took 2 months practice. I dedicated 2 months, 2 to 3 months. I'm not exactly 2 months. It's more than 60 days. I practiced the smart money strategy into the bank nifty. Now I can straight away jump into the thing, but you should not do that. You have to practice before you jump into any market. When you're switching over to the market, you have to practice. practice, then you will do, you have to trade in the real market. When we search Euro USD, we find many description inserts what to select. That's great question. So if you search here in Euro USD, you will be having a lot of Euro USD here. Which one I have to choose? One thing you need to understand, these guys, FXCM, Moneda, Forex.com, Pepperstone, IDC, Capital.com, these guys are either you can consider them as exchanges, different exchanges. I should not say that they are exchanges. They are liquidity providers. They are called as liquidity providers. Which liquidity provider I have to choose? So in my personal opinion, if you are trading the funding platform, you have to choose 8cap. 8cap is the broker. Most of the funding platform use the 8cap broker. Okay. But if you are using with XYZ brokers, anything which comes from the top, you can use. You can use top 3, top 4, anything you can use. Most of the time, these are have equal. I mean, though there's no much difference, but you'll be having small differences. You can use any of these, preferably the top 10. You can use. But if you're using funding platforms, then you can choose 8cap. 8cap in certain platforms using different things. But FTMO, my Forex funds, they are using the 8cap. Okay, you can choose 8cap, or maybe you can use any of this. There is no problem with that. You can use any of this. Okay, I think Sid, I have explained that. Sorry, you are a full-time. Yes, I'm a full-time trader. I'm trading in the Bank Nifty, Nifty 50, not Nifty 50, Bank Nifty. I'm running a firm, guys. I'm running the prop firm. Okay, where I trade Bank Nifty mainly, sometimes Nifty 50, very rarely Nifty 50. Okay, I don't do investments. That is not my thing. And similarly, I'm a FTMO trader. Third thing is I'm a Forex mentor. I'm a life coach. I hope you know what is life coach. And I also run few other businesses. Like I'm not running actually. I'm a sleeping partner of few other businesses. Sleeping partner of. We have 3 businesses, which is one is part of my wife's business, one is part of my in-laws business, and the other one is part of my my own business. Okay, so these are things I'm doing regularly. So like life coaches, I recently started few months before. Forex coaching I was doing ever since last 3 to 4 years. I was doing this for corporates back then, corporate training like that, and later I come to the public figure. Then that's what I'm doing. And other businesses are also related to the education and placement services kind of other things. And I'm planning to start the 6th one, that is called export and import. Preferably export business. I'm going to start that very soon, maybe by mid of the next year. That's what I'm doing. Okay. So when I jump into the export and import business, maybe I'll stop providing the Forex mentorship or something else, like something I have to sacrifice, because that is my long-term my ambition. Ever since I was working under an export company back then in 2010, so I was wanted to do that business, but time is not permitting. Maybe next year I'll be starting that. FTMO, my Forex funds, which is easy to crack. Cracking the challenges is really easy. Cracking the challenge is really easy. Sometimes people will be cracking the challenge by within 2 days also. 2 days, 3 days also will be cracking. But consistency is the key. Not cracking the challenge. Cracking the challenge, you will be doing that. If you have 1 or 2 months practice, you can definitely clear that easily. Consistency is the key. Okay, that people are lacking. That's why I told you guys, I am telling you guys, at least 2 to 3 months you need to practice. Okay, you can easily crack. You can easily crack after 1 month. You can do that. But consistency, continuing the challenge, it's a really difficult. There's a research, not research actually. My Forex fund, they have recently, not recently, 6 months before, they have circulated an email saying that most of the people, those who already passed the challenge, right? Those already cracked the challenge, they are failing. The reason is they simply pass the challenge within 1 or 2 to 3 days, and they are now unable to make profit in a consistent way. That is why we are going to learn the consistent way of making money in this bootcamp. Okay, if you learn that, if you incorporate that consistent way, you can easily crack and you can able to survive after getting the real funded account challenge, real funds. Okay. Sir, is there any kind of operators in the market? That is called liquidity providers. There is no specific operator. Now, whatever you are seeing, these guys are operators, I have to tell you. But apart from these, there are certain operators are there. We'll be discussing about that when we cover about the liquidity concept. I'll teach you that. Okay, I'll tell you who are the operators, what are the things they are doing, everything. I'll teach you that. How many trades in a week or in a day? Okay, it's a personal question. Now, after learning this bootcamp, what you need to do is per day you have to take at least 5 trades in a demo account, 5 to 10 trades in a demo account. Okay, in a demo account. Now, please understand, you have to do this in a demo account. And whether the trade is giving the profit or loss, that is not a matter. Okay, that is not a matter. That's why I'm saying it's a demo account. Profit or loss, that is not a matter. You have to able to find the strategies in the chart. That is the first criteria. We are not looking for making profit or making loss. We are looking for, can I able to apply the strategies in the chart? That is the first criteria. So per day, 5 to 10 trades you have to take. Only then you will be watching the charts. You have to watch the chart first thing. You have to observe the price action. I'm not telling you to make profit the first 1 week or 2 weeks. First 1 week, 2 week, you have to observe the charts. You have to apply the strategy. You have to buy, sell. Whether it is working or not, that is not a matter. Whether you can able to apply the strategy or not, that is important. Okay, initial one or 2 months you can do this in a demo account. Okay, don't do this in real account, you will be losing money. After 1 or 2 months, you will come to know something. You will come to know that you can able to find the strategy, or you can able to apply the strategy properly. Right now, you can reduce your trades. Maximum per day 4 trades. Maximum 4 trades per day you have to take. Okay, and please note that day trading is not everyday trading. Okay, today you are trading means you can skip tomorrow, no problem. There is no compulsion you have to trade every single day. Day trading is not everyday trading. Okay, today you can take 2 trades. Tomorrow you can take 2 trades. Day after tomorrow you can take 2 trades, and next 2 days you can skip. Or today you can take 5 trades. Tomorrow you can skip. day after tomorrow you can skip, and after that you can take 5 trades. You can do that. Okay, but my suggestion, what I was doing back then was like 5 to 6 trade, 5 to 6, sometimes 8 trades I'll be taking every single day. Now what I did is, now back then every trade I capture only 200 points. So 5 trades means 1000 points, like that, but not exactly 1000 points. Sometimes 900, sometimes 750, 850, like that. Okay, because all trades you cannot capture 200 points. Okay, but later what I improvised myself is per day maximum 2 trade. Okay, but the same 800 or 1000 points target. Okay, when you do like this, your responsibility will be increasing. You have to take the trade which actually works. Okay, you cannot guess the trade and you cannot take the trade. When you trade like this, there are a lot of responsibilities are there. So that's why I'm saying, first start with 5 to 10 trades in a demo account. Then slowly, when you come to the real account, like maximum 4 trades or 2 trades, 3 trades. But when you take 2 trades, you have the responsibility of making 400 points. 200 point in one trade, 200 point other trade. Okay, so your responsibility is increasing, and you'll be looking for the proper setup, proper buy area, buy or sell area, right? So initially you have to take a lot of trades to observe the price action. You have to take a lot of trades. Okay, let me see. Now, if you ask me how many trades I take, is in a week only 3 to 4 trades in a week in FTMO account, because in a, what do you call it, in a bank nifty, I will be trading every single day. So in FTMO, I don't need to trade every single day, because per trade it gives you 600, 700 points. Enough for that day. Okay, next day you take another 600, 700 points. Enough. Just imagine if you are trading standard lot. Okay, if you are trading standard, at how much you will be getting in a week, you'll be making like $1,300, $400. Isn't it enough? Right? That is lot. That is huge for me. Okay, I'm happy with that. But if you are not satisfied with that, then you can do over trading. Today, one person has asked me, sir, how can I avoid my over trading? Like that, he asked me in the group, not in the group, in my personal DM. So that's why I'm saying, start with big number of trades, increase the number of trades, and slowly you have to reduce your trades, and you increase your target. First, you are taking 5 trades, or per trade 200 points, 200 point, and gradually you'll be reducing your trade size. You will be increasing your target. That is the best way you have to trade. That is the best way I have to trade it. All right. So funding platform means getting money into the company. You will be getting the money from the company. You'll be getting the money from the company, and you'll be trading. You are going to manage the money of that particular company. That is called funding platform. Which is best? My Forex fund is best. Recently, my Forex fund is best. Sir, how much can a successful trader make from the bootcamp? Yeah. Okay. I know there are more than 16 students who cleared the funding platform challenge. More than 16 students for the last 6 months. From the June batch onwards, 16 students cleared. Unfortunately, nobody talked to me. Okay, they clarified all their doubts and they just vanished. It means they are making money. But some of the guys, not from the funding platform, some other guys. One lady from the Bangalore, she runs the business. She's an entrepreneur. She's trading using some XYZ broker, not funding platform. Every single week, she's making 50,000 rupees. 50,000 rupees. And sometimes she makes 1 lakh rupees per week. And whenever her trade is phased, Only then she pings me, she asks me. But sometimes she will not come back. Okay, most of the people are like that only. That's why I cannot because it is like they learned the thing, they just vanished. Okay, and now that lady, her daughter is learning from me. Her daughter is 19 years old daughter, and she had some debts, so she want her daughter to learn the forex trading. She want to help her, so I'm teaching her in my private coaching. Okay, it's completed now, and she's now the 19-year girl now trading in the forex market, and she's practicing now. Most probably from the next month onwards, she'll be starting from the real amount. So people are making more than 50,000. Some people are making 10,000. It is depends, guys. It depends, and most of them don't come to me saying that I'm making this much, this much. Okay, so I asked one guy who trading only cryptocurrencies. Okay, he invested $500 and he used the smart money strategy with some extra EMA and some RSI indicator, and he converted the $500 into $900, $400 within 15 days in cryptocurrencies. Okay, and he shared me that, sir, it's working really fine, everything, and now he's vanished. He got the thing and he's making money and then he's vanished. That's it. Okay, I'm not saying this. I'm not saying anything false. Okay, whatever I'm saying is true. Okay, so people are making, and when they make money, though, they don't come back. Yeah. How many trades in a week or 1 day? 1 day, that's why I told you guys, per day you need to take 10 trades in a demo account. Per day, 10 trades. Okay. In the beginning, in the demo account. Then slowly, steadily, you can reduce the trade to 3 to 4 trades per day, 3 to 4 trades. 5 days you trade on 5 days. And after that, you have to reduce the timing, like only trade on 3 days in a week. 3 days in a week, 4 to 5 trades, five trades in a week. Like that. You will be reducing, guys. You will be reducing. I'm telling you this. You may feel that I have to take 10 trades every day. No, you don't need to do that. But initially, you have to do 10, 15, 5 trades per day. Then slowly you will be reducing. I'm telling you, you will be reducing. You don't want to sit in front of laptop or PC. You will be reducing. By gradually, you'll be maturing, your experience will be increasing. By the way, you will be getting. Okay. All right. Life coach X, which means I don't know what is X. EX. Example you are asking. Sir, will you gonna take what? No, sir. See, guys, you need to understand one thing. We are everybody have the limitation, guys. To be frank, I'm telling you. Even though you do a lot of businesses, you have the limitation. You cannot. If you ask me, can you trade for? Can I buy here, buy today, and hold my position for the next 1 week? I cannot do that. Okay, if I'm buying today, Euro USD, I'm buying today, I cannot even hold the position more than 2 hours. I cannot do that because for me 2 hour trading is enough. 200 points is enough. 300, 400 points is enough for me. I cannot hold my position. But some of my students, they are buying today and closing the position for the next week. They have that much courage. So they can make more than me in trading. I am talking about only trading. Okay. So, which doesn't mean they are better than me or I am better than them. Not like that. Okay. I know this works like this, and I'm comfortable with this, and I'm okay with this. Similarly, some people will be having different mindset. So why I'm doing all other businesses? Because I am not satisfied with one business, one thing. Earlier, I was working under one company, or 2 companies, 3 companies, where I have faced lot of problems, lot of psychological problems. I have to prove myself for getting my incentives, my increment, my promotions. Why should I prove these guys? Why should I prove these guys when I can able to make money? Why should I prove these guys? That is the obsession I always had with the businesses. Okay. That is the only thing. You should also have that obsession. You have to clear this thing. Funded account challenge. I have to clear this. I should not trade with my own money. That is the spirit you need to bring in. You should open a lot of new businesses. I'll help you guys. If you want to become a mentor, I'll help you guys. Nobody will tell you this. Okay. I told several of my students, once you started to trade the market, once you started to make the money, just start mentorship. Teach people. Make money with that. If you guys are interested, I'll teach you that. How to teach other persons. How to make money by teaching. That also I'll teach you guys. Okay, nobody will tell that. Okay, nobody wants the competition, but I need competition. You can teach smart money strategies to the people. Okay, so I'll help you guys that also if you want, but it will take at least 2 to 3 years because you need to practice. You need to make money by your own. Only then you have to teach the public. Okay, so that is important. We have to have the obsession. That obsession. Okay, world needs more mentors like you. I'm also selfish, guys. I'm not telling that I'm a great. No, I am also selfish. Everybody is selfish, right? But thing is, it is like when you teach something which you already know to the people, you will get whatever you want. You will get. There is no need to hide the things. There is no need to teach less, teach more. Whatever you know, you have to teach to others. Okay, that is my policy. That is what I am following. That is what given me everything I wanted. Okay. All right. How much target we can target? If you are trading with funding platform, you can make $2,000 per month. $2,000 per month. You can easily make. Even if you trade 3 times in a week. 3 times in a week, you can able to make that. But that's a long journey. But for now, you can every day how to trade. After passing the funding platform channel, how to trade every day. By the way, you can able to capture more than $2,500 easily. You can do. I am making 2,000, sometimes $1,500, sometimes I'm okay with $1,000 because I have multiple source of income. Okay, so I will be always like more than $1,000, $1,500, $2,000. That is enough for me. I'm okay with it. I'm happy with it. That is fine. But if you are obsessed with money, maybe you can have more also, right? Bank Nifty basics. I can tell you how to understand how to analyze the market Bank Nifty charts and how you can trade. Everything I can tell. I can teach you that. But I'm not a options trader. I don't use options. The thing is, my clients don't like options. Options is really good if you are really good at smart money strategy. Options is really good. I personally don't trust options. Options are I felt that options are kind of gambling kind of thing. So I don't trade options, but I'll teach you how you can trade options. Okay, in a realistic way, not using the strangle, that kind of setup. Okay, I'll teach you guys how you can trade options in a realistic sense using the smart money strategy. But I'm not trading options, so I'm not an expert in option. Okay, there is no decay in the forex. There is no decay. There is no time decay in the forex. 1 point is how much dollars? 1 point is not much. It will be differing, Kavita madam. It will be like 1 point, which pair you are trading, how many lot you are trading, what lot you are trading. Depends upon that, it will be changing. For example, if you are trading Euro USD, standard lot. Okay, 1 point means not 1 point, 1 pip means you'll be making $10. right? $10, but it will be changing for other currencies. Other currencies it can be like $7, $8. So it depends upon the currency to currency. It will be changing. When you calculate from the peak point of view, it is like $10. When you calculate the point of view, then it's a $1. $1. Now you can convert $1 into 82 rupees, 82 rupees. And if you convert the $10 into 82 rupees, 820 rupees, right? So like that. Yes, you can expect 1,000, but not immediately. Okay, you have to practice for that. If you pass the FTMO challenge, the funding platform challenge, you will be making $1,500. Okay, challenge criteria itself $1,500. If you read their what do you call it, the disclaimer and all, they will be saying that realistical target. For using $10,000, realistically you can make $2,000. That is the realistical target. Okay. Using $10,000, we are not going to make $20,000. That is not our target. Okay. So $1,000 to $2,000 you can realistically you can expect. I have $25,000 account. I do have $10,000 account. I'm going to close that, and next year, I'm going to open my Forex fund challenge. I'm going to do that because I'm going to. I'm not trading with a $10,000 challenge account now. I'm using $25,000 demo, the FTMO account. Now, from next month onwards, I'm going to open another $10,000 challenge with my Forex funds. So a lot of people are asking me to make video on that real challenge, how to pass the real challenge. So I am going to apply the challenge. I am going to pass the challenge. I'm going to record the videos. I'm going to apply and upload that into the YouTube channel. I'm going to open the YouTube channel. I'm going to apply. I already have the YouTube channel, but I'm going to upload that. By the way, you can see how I am passing the challenge and how I'm getting the fund and how I'm trading the real. So I'm planning to do that, but I don't know whether my time permits or not. Sir, funding play 5. I don't know what is funding play. Is there any lot decay in the Forex? No, we don't have lot decay. But if you are putting some orders today, you can set the expiry. Suppose you are buying today, you can specific some time. If market is not triggered, the buy order is not triggered, the order will be automatically expired. It will be closed automatically. That you can do. Sir, funding platform, do we need to attain the minimum? No, not. After passing the challenge, there is no minimum profit. There is no minimum profit. There is no minimum trading days. You can trade as long as you wish, and you can make as long as possible. Can we finish here? Yes, because you guys are asking a lot of questions, right? So that's why I'm just responding all these questions. Is there any lot decay? No lot decay, Mr. Okay. How? Because there is no settlement. There is no settlement means there is no lot decay. There is no decay at all, guys. This is spot market, kind of smart market. Okay. Is there any binding for how much time one must trade on the funding platform? No. Mostly they'll be giving 1 year contract. But recently, some of the platforms are giving like 6-month contract also. So they are not revealing, guys. Nowadays, they are not revealing. Nowadays, they are giving different contract for different peoples. One of student who passed two days before, he got different contract. Okay, the terms is different. And one guy who passed in last month, he got a different terms. So I don't know why they are doing like that, but they are giving some different contract for the different peoples. Right now, they started to do this because they are trying to restrict funding the funded accounts. That is one of the things. No, Mr. Siddharth, we don't need to achieve minimum target. If you make $1,000, you can withdraw. If you make $500, you can withdraw. Whatever the amount you can withdraw, you can do that. What if I will not for a 6 month in FT mode account? I got answer. Okay. I saw the strategy which you told today. It's working on GBP, JPY and euros. Thank you, Mr. Ashutosh. No, I don't see that. That's why I told you guys. I have fears, guys. Vishal, Mr. Vishal, I am a human also, right? I'm not a machine, right? Why you are not tracking 2 lakh FT mutual? I cannot do that, right? $25,000 itself, it's big for me. See, when you have a lot of money, you have a lot of responsibility, right? So I don't want that much. I'm okay with $25,000. That's okay for me. So if you will come to that point, Mr. Vishal, I'm telling you, you will come to that point. Before you make money, you will be having, I want to make money, that kind of obsession you'll be having. Once you started to make money, when money comes to you every single month, you will not have that obsession. You will get the fear. You will get that, oh, this much is coming, I have to pay income tax, I have to pay advance taxes, I have to do this thing, I have to manage the finances. So many obligations will be coming. So you will eventually end up with closing some of the account. Okay. So if you have larger money, then you'll have larger responsibility. So stick with $10,000. That is enough. Or maybe $25,000. That is enough. Okay. So I'm talking from the human perspective. You cannot manage. I'm not a billionaire, right? If it's Ambani, Adani means they are already having that much money, they can able to tolerate. I cannot do that. Even you guys cannot do that. If you are a monthly salary, if you are receiving monthly salary like 40,000 rupees, like 35,000 rupees, suddenly if you are receiving 1 month 2 lakh rupee from the funded account, you will be having that shiver. Okay, you'll be happy, but some point of time you'll be having a lot of money and you'll be having some pressure, internal pressure you'll be having. Okay, then you have to appoint every for everything you need to appoint certain person, you need to give the salary and all those things. Auditors, you need to hire the auditor, you need to hire some expert investment advisors, so many things. So you'll be having a lot of trouble with that. Okay, so sir, we can also form Forex community. Sir, we are already in the community. Okay, we are already in the community. You will be in a part of WhatsApp group only, right? We will be trade from the Dubai account. Okay, right? Where to invest that much money? Yes, that's why we have to. We don't have any other option. You need to purchase the what do you call insurances, life insurance, health insurance, motor insurance. What else? You have cancer insurance, or you have to buy some what do you call mutual funds. I have a lot of mutual fund investment. I don't know when they are maturity date, when they are. I don't know. My auditor is taking care of that. He'll be telling that you invest here, or I'll invest. Okay, a lot of fixed deposit, lot of what do you call the cheat funds. Okay, a lot of gold, right? So you can invest in the real estate also if you want. Okay, so we'll trade from the Dubai. Dubai is really great if you are going to Dubai. There is a lot of restriction. There is no restriction for the forex trader. Most of the US citizens are coming to Dubai. In US, you have a lot of restrictions trading the forex market, just like stock market here. Now you cannot trade stock market in India, right? You have a lot of capital. You should have a lot of capital. Similarly, if you want to trade the forex in US, you should have a lot of capital. Lot of US citizens are migrating to the Dubai. Okay? So because the rules are really liberal, so maybe you can jump into the Dubai. But I love India, so I don't want to go out of India, right? You are the best. You are giving confidence to me. One day, you want nothing. Thank you. No problem, sir. No. So I told you guys I'm a life coach, right? So that's the reason I'm giving a lot of confidence. Okay. El Tarado. say something about you, sir. I told you that, right? I am running this business, that business. I'm a humble, I'm the normal middle class family guy. I don't I don't even know what is trading. 2012 I started. 2012 I started accidentally uh, with a guy who told me that if you invest 10,000 rupees and you can make money in, you can make 20,000 rupees in crude oil. There's a guy who told me, and my colleague, and I was telling them him that that is gambling. Even though I have a financial background, even though I studied the cost accounting, right? You know the cost accounting, ICME, ICWA, right? I'm a dropout of ICWA. Back then it was called ICWA. Now it is called as ICMA, right? It's something related, something just like chartered accountant. So I was telling him that it is gambling. Trading is gambling. Don't do this, right? And I deposited that the 10,000 rupees. Back then my salary was 25,000 rupees in 2011 or 12. I'm not remember. 12, I guess. 25,000 rupees my salary. And I was working under a company called, I hope everyone aware about the Vedanta, right? Vedanta Group. Anil Agarwal, right? I was working under that company. Okay. So where I learned my trading. Very first time I learned my trading. And back then I was studying in the college. My professor told me that everyone you should trade. Everyone you should involve in the forex market, not forex market, stock market. So during 2009, 2009, 2007, there is a Satyam Infotech scam. Have you ever heard about that? Satyam Infotech scam. There's a company called Satyam Infotech. They have scammed, they have purposefully increased the share value, book value, right? So back then I was studying in the college. I was doing the BCom second year or first year. I don't remember. Right. Back then we have done the case study on that. My professor done that. And back then the stock prices was like 5 rupees, 5 rupees, 2 rupees, 3 rupees. And my professor told us that, guys, Satyam Infotech share is just 5 rupees. Tell your father and mother, because back then we are minors, right? Below, not minors, I don't have the PAN card and all. We don't have the PAN card and all. So he told me that, guys, tell your father to purchase at least, invest at least 10,000 rupees into the Satyam Infotech shares. Because Tech Mahindra going to acquire this company, they'll be acquiring this company. So invest some amount here so that you can get some long-term benefit. Like that, my professor told us. Everybody is taken that as it's a kind of, they heard in one year and they just left. But I was thinking about that. I told my father, why can't you do university here? And he told me that, Baya, this is gambling. Stock market is gambling. Don't do this. Okay. Till today also, my father is saying stock market is gambling. He is doing some gambling. That is a knowledge. That is a knowledge of people are having. Okay. That is the first point I got impressed with the stock market. I want to do this thing. Then finally, after 2 to 3 years, when I got the job in Vedanta Group, so I had a chance to speak with some Gujarati peoples. Now Gujarat, a lot of people will be trading in the markets. In India, if we have 100 traders, 90% of traders from the Gujarat only. So that is a saying back then. My professor used to tell. So I have a talk with these guys, and one of the guys told me that you invest 10,000 rupees, you can make 10,000 rupees in the crude oil. So I started my career as a crude oil trader, not a trader. I just invested the money with a broker called ShareCon. There's a broker called ShareCon, right? And they have given the profits. I invested 10,000 and they have given 5,000 extra. I was really happy. And they'll be sending the message. I have to respond the message. If I respond the message, they'll be buy sell. And all of a sudden, some days they said your account becomes zero. Everything you lost. I was curious. I was like, I was frustrated with that. Then I decided I have to decode this thing. Then my friend, one of my friend who did MBA, and he joined in the a broker called Carvi. Now he's not there. The broker is now they have banned the broker. Back then there's a broker called Carvi Broking. So where he worked as a trader. So he taught me that, right? He taught me, he told me that because in school days we were like competitors, right? He'll be scoring much and I'll be scoring much. We are like competitors. Uh, so he told me that if you invest money, I can convert and I can convert the money. You are just working, but I am a trader. I can able to make money. Like that, he challenged me. So I learned the thing, and I it been almost 10 years. The journey was right, and now that guy is not in this field, and he is in the different field, but I'm still sticking with the field. So that's all. It's about me. Lot of struggles, lot of losses I have faced, lot of things, lot of mental tortures, lot of personal failures, lot of things happen. It's more personal. Okay, lot of money I have lost. So, lot of time I've cried. So now I'm enjoying. Now I'm enjoying. All right. So it's 11:15. I don't want to spend more time with you guys. Go and take a sleep. We can connect tomorrow. Okay. So I'm going to share the PDF. I'm going to share the assignment with you guys. So go through that and do the assignments as soon as possible. All right. Okay. So we can take a break. We can take a break. We'll meet tomorrow. Now we today we discussed a lot of unusual unwanted things, but tomorrow always it will not be like that. Tomorrow onwards we'll be discussing purely the strategies. Okay, purely strategies. All right. Sure. Share some time zone up. I'll share it tomorrow. Okay, I'll share it tomorrow. I'll give you that website also. Because I really feel hungry. I have to have some food. Okay. Yeah, market clock. This site also you can use. One more site is there. I'll share you that also. Maybe I'll immediately share you in the group. Okay. Take a break. We'll meet you guys tomorrow. And tomorrow we're gonna learn some useful thing more than this. And today is the foundation. Okay, this is really important. All right, guys. Thank you for joining this bootcamp, and I hope you will be getting some value. You got some value today, and you will be getting some value in this entire bootcamp. Okay, trust me. All right, guys. All right. Thank you. Have a great day. Good night. Bye. I'm just stop sharing. So stop recording.